Hey, yo, Jay, can we get some ratchet one time?
Look, I don't wanna talk. How you try and press the kid and really you was soft. All you know is capping, homie, you don't know the law. Pedal to the metal, you ain't catching me in park. I just hit the stop. I don't wanna speak. Talking all that good, so I just hit you with the plays. Running up the score like Tyreek, I'm going deep. Watch me how I'm saucing, I be spreading it with ease. You gon' see the peace. You gon' see the flex when you hear these writtens. Trust me, you know the difference. I got a long ways to climb before you see a slippage. I see the process and the journey I'm supposed to be, but perplexed, cause I don't really see nobody close to me. Hopefully this ain't wasted and I know it ain't. You gotta take the time for seasoning to marinate. You need the patience and the pressure just to detonate. I'm trying to blow up and these heathens need to get it straight. Gifted with a vision and precision, I'm just trying to make it high key. Might be breaking free like I was Zion in some Nikes. Tucked at the crib, bro, you know just where to find me. Making beats and spitting crack verses pretty likely. Yeah, socks with the burst, boy, I ain't changed a bit. Normal guy till I die, you know what it is. You probably thought I'd give up now that I got some kids, but really now I got these arrows aiming at your ribs. I don't wanna talk. How you try and press the kid and really you was soft. All you know is capping, homie, you don't know the law. Pedal to the metal, you ain't catching me in park. I just hit the stop. I don't wanna speak. Talking all that good, so I just hit you with the plays. Running up the score like Tyreek, I'm going deep. Watch me how I'm saucing, I be spreading it with ease. You gon' see the peas. Hey, please be on the notice, these my motives. About my chicken and its rotis. You parsimonious, you take it all cause you a locust. My focus is to grow this mission. A visionary, get a dictionary. We here off the rip and we ain't sharing, we just caring. Let me speak it to the manager. We damage her, no you ain't messing with an amateur. I'm ramming, the competition, they ain't standing up. They fanning from left to right cause now they branded us. Now who that is? Mike Jones, they ain't want me now, they all on me. Got counterfeits trying to play me, I guess they thinking I'm Sony. These big head dummies showing up and out of their character. Homie, you need a price cause without it the squad ain't hearing you. Top of that, we ain't fearing you. We swinging for the fences with the sting of a left hook that connects with Sonny Liston. I'm dismissing any and all of the disrespect. Nonetheless, it ain't a threat, I'm just letting y'all know who's next. I don't wanna talk. How you try and press the kid and really you was soft. All you know is capping, homie, you don't know the law. Pedal to the metal, you ain't catching me in park. I just hit the stop. I don't wanna speak. Talking all that good, so I just hit you with the plays. Running up the score like Tyreek, I'm going deep. Watch me how I'm saucing, I be spreading it with ease. You gon' see the peas, you gon' see the...
Ooh, I tell her get low, gon' rock with me. You gon' mess around now and get a shopping spree. I'm now in your possession like apostrophe. Ooh, enough with all the talking, I just told her say less and do more. Do more, do more, do more. Ooh, I tell her do more, do more, do more, do more. Go ahead, set the mood right, dirty like a food fight. You been working all day, load it up in 2 nights. Do more, do more, do more, do more. Ooh, I tell her, and she gon' work that round. I'ma mess around and drown when she drop that down. No more phone me blowing up, I like not right now. Oh, I swear that she in next the way she work that mouth. Whoa, automatic cause she move, she be cousin static. I be straight up like an addict, might become an addict. Now I gotta have it, had enough with all the moves, yeah, move here. Ooh, let me grab it now, I'm on 1 year. Now I'm not done yet, told her wait right here. I'll be back one sec, this is just time out, this is not no way. Go and grab that friend, now you know what's next stage. You been rockin' with it all-star, baby, and I know you coming early like a five-star, baby. Packing out the seat, this ain't no hostile, baby, and they know me in the city like a mob star. Ooh, I tell her get low, gon' rock with me. You gon' mess around now and get a shopping spree. I'm now in your possession like apostrophe. Ooh, enough with all the talking, I just told her say less and do more. Do more, do more, do more. Ooh, I tell her do more, do more, do more, do more. Go ahead, set the mood right, dirty like a food fight. You been working all day, load it up in 2 nights. Do more, do more, do more, do more. Ooh, I tell her,
Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know, maxed out. Never see me coming, I'm a landmine. Yeah, I ain't taking orders in command like, yeah, you about to see me on demand like, you know on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and it's the dream, and we coming for the bag. Yeah, and we ain't ever going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll. And it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Hey, on the roll, here we go, yeah. At the top of the class on a roll. Hey, and it's time to run it up, yeah you know. Yeah, maxed out, put the pedal to the floor. Yeah, on the roll, here we go, here we go. Here we go, at the top of the class on a roll. And it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Hey, on the roll, here we go, yeah. At the top of the class on a roll. Hey, and it's time to run it up, yeah you know. Yeah, maxed out, put the pedal to the floor. Yeah, on the roll, here we go, here we go. Here we go. On a roll, here we go, here we go.
What is going on, everybody? Welcome back to the Frankie Candles live stream every single weekday right here at 5:45 p.m. Eastern Standard Time, as well as, 1:34 p.m. Eastern Standard Time when we have FOMC, especially this FOMC, guys. Things are about to get nuts. We got Powell coming in here to give us some, hopefully, very good news. I think, 25 basis points is probably baked into the price here, guys. But we'll see what happens. I don't know. We got some key resistance above. We do look like we may be able to get a push up, but things are probably going to get pretty pumpy and pretty dumpy. So if you're out there trading, make sure you're using a stop loss. Be careful out there, guys. But we are about to load up the bagel cannon here, the bagel blaster, as we like to call it. So hopefully, Jay Powell turns on that money printer and starts pumping Bitcoin. We're loaded up here, guys. We're loaded up here, stacking a bunch of hungies and a bunch of 20s up into this. Oh, God, we got too much for the bagel blaster, guys. It's overloaded here. Hang on. Give me a sec. We got to load this up. We got to make sure this thing's ready to fire. Hopefully, we don't have to not shoot this. Hopefully, we're going to be blasting this off today, guys. But we're going to see what happens. We got some volatility about to enter the market like crazy right now, guys. I want to do a quick market update, let you guys know what I'm expecting on price. And then we'll watch the live price action. You know, the last live stream that we did with FOMC was pretty exciting. The ones before that were pretty boring. So hopefully we can get some crazy price action, whether it is to the upside or the downside. Thank you all for tuning in and spending your time here with the Candle Mafia and your boy Frankie Candles. Smash that like button if you have not already. Every 100 likes we get gives you guys some extra chances to win some free crypto. Or maybe some Frankie Candles hats. I don't know. We're going to be giving away some stuff here, especially if Bitcoin pumps. So smash that like button, guys. We're going to let's go for 750 today. If we get 750, we'll give away a little bit of Solana, which always seems to be the one that everyone wants. Maybe we could take a poll. But if we hit 750, guys, we'll be giving away some Solana. Maybe we'll just do it on this live stream or on tomorrow's live stream. But yeah, shout out to the Mafia. What is going on, guys? Welcome in. Shout out to VW John. We got William in the chat, said all-time high, baby. Let's go. We got Jet in the chat. He says, at all-time high, rejection or moon. Well, I'm going to try to break that down for you guys before we start seeing this crazy price action. Jumper says, Frankie, does BTC still when alts start to pump? Shout out to Jumper. I think you mean, is Bitcoin going to continue to pump if alts pump? Typically, we see those alts pump when Bitcoin starts to get a little bit of a pullback or goes sideways. So we'll have to see what happens there. We got Shunzin in the chat. Satoshi Glakamoto, one of the best names in the space. Shout out to All Set. Let's see. We got Crypto Arrow. Kate Diggity Phoebe says hi. If you guys don't know who Phoebe is, it is my imaginary pet goat. Shout out to Phoebe. But yeah, guys, we got a lot of stuff to look at here. So let's go ahead and jump right on into the charts. Let's get into it. So here we are, guys. Bitcoin, baby, Bitcoin. This is about to get very exciting. And obviously, we'll see what happens. Look at that 2-day candle, guys. Insane. But yeah, let's go ahead and break down the price action here really, really quickly. Let's see. You can trade Pepe on Kraken now. Hey, shout out to DMB Smurf. Very, 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 very interesting. Phoebe is real. Shout out to VW John. Yes, she is. Hopefully, we can make her real soon, guys. I am in search for a virtually adoptable goat, and I think we're going to be able to make it happen at some point. So yeah, let's go ahead and Powell wants to keep his job. Hopefully, he's going to go nuts on the cut. Yeah, so we'll see what happens here. And again, guys, before we take a look at the actual technical levels, I want to talk about kind of where we are, in the cycle here, guys. This has historically been the time where we do see Bitcoin start to go a bit crazy. Now, again, I'm not obviously expecting Bitcoin to reach 100K like during this live stream or anything like that. But as you guys know, typically we have those halvings come in. We kind of go sideways, creep up towards that all-time high. And then, October is typically where we start to see, October, November is really where we start to see things start to take off. You can see having 175 days, absolute blast off. And then we have, again, having 161 days of sideways price action, big pump to the upside. And then here, having in April of this year, I guess it was technically 182 days of sideways price action. And we are starting to see that little pop to the upside. Now, again, I wouldn't expect it to just be a giant candle to 100K. Obviously, we have a lot of resistance above, and we'll talk about that. But, we are right on time here to see this stuff starting to start to take off. And, with these rate cuts, this is one of the biggest things that we see that is very, very consistent with these Bitcoin bull markets, right? The crypto bull markets. But, is it just tied to the looser monetary policy? It has been the case every single bull run. So, there's a lot of things lining up here. We may be able to, see Bitcoin start to get really, really exciting here. Now, another thing I do want to take a look at here, other than just seeing the timing of the cycle here, guys, something that we haven't looked at it in a while, but we have looked in the past at the Russell. Let me see if I can pull it up. RTY. So the Russell 2000, guys, this is essentially like total 3 for the penny stocks in the stock market, right? So it's like the altcoins of the stock market. We actually have seen a nice breakout of this, and this is another thing that we have seen very, very consistent with the crypto bull market, also alt season. So we're also seeing the Russell breakout as well. So we'll see what happens here. Things are starting to line up, and again, I'm not expecting this to be like, this might be the start of it, but again, nothing's going to go up in a straight line forever, but hopefully we can get it to keep going up in a straight line just a little bit. So let's see what we get going on here, but let's go ahead and jump on into these key levels of resistance. Now, looking at major price action here, guys, obviously we've gotten the big breakout of our major range. Let me pull up the actual Bybit chart here. So yeah, we have gotten, let me hide some of this TA. We have gotten that breakout of the major volume profile that we were consolidating in for about 7 months. Absolutely insane. We are finally getting that big push to the upside. We broke out, came back down, tested that POC, and now we're getting that bigger push to the upside, and Bitcoin just keeps making those all-time highs, those sweet, sweet all-time highs. So super exciting. However, let's go ahead and take a look at this local price action and see where we could potentially go next. Let me go ahead and pull up the current local volume profile here, guys. Now, yesterday, what we were kind of looking at, let me actually hide this real quick. What we were looking at yesterday was this kind of, as Bitcoin was creeping up, we were looking at this volume profile right here. Bada boom, right? We got that breakout. I actually was in that short position from last night. I didn't take it on the live stream, but we were in that short here from the live stream as we were seeing this 30-minute bearish divergence. Let me pull up the 30-minute, right? We came up, started putting in that 30-minute bear div, and, it's funny, I took that short, and, a lot of people are like, and this is the key to, kind of understanding trading, guys. I took the short here, absolutely played out beautifully into where, guys? Where did we wind up coming into? Obviously, we have that lower volume profile, and very similar to that larger range that we just showed. A lot of times when Bitcoin breaks out of volume profiles, we'll get a deviation above the high. You can look for shorts here as long as you understand the context, right? Things are obviously bullish here. I was not looking for this to nuke us down to 0, but I did take that nice little scalp short here, and we came down, tested that value area high, came down, tapped that POC before finally getting that bigger break to the upside, or semi bigger break to the upside. And can we see that continuation up here? And if we do, I am now stopped out in profit here. We came down here. moved my stop loss into profit, and then obviously got stopped out in profit on that trade, which is beautiful. Made some money on that move, and now we are creeping up here. Is it possible to get up into some higher prices? I do think it is definitely possible. Obviously, FOMC is going to be very, 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 very volatile, so we have to be careful. We're going to sit here and watch the price action together. Last time, it got super exciting, so exciting that we were watching the 10-second chart, and it pumped so hard, it actually like made me jump out of my seat because my screen flashed so fast. But yeah, what are those next key levels to the upside, guys? Well, very simply put, we can't look left because we are at all-time highs, right? Bitcoin putting in another all-time high at $76,770. And, you know, if we do continue up, guys, I want to talk about what I'm looking at. Now, you know, obviously, we can't look left for that price action, but we can look up here towards these Fibonacci extension levels, creeping up towards about $77,000. We just kind of, you know, almost made it up there just now. And we do have some liquidity sitting up here. Let's pull up those liquidation heat maps really quick. Bada boom, bada bing. Obviously, we do have, let me just make sure I can update this. Bada boom, bada bing. Okay, so here we are. I do want to point out this liquidity, guys, because can we get the pump to 77,000 or potentially into like 77.3? You know, at the high end, 77,700, and then after that, we could wind up seeing things get a little bit nutty. But if we pull up the liquidation heat maps here, come on, EXO. If we take a look at the 12-hour chart here, bada boom. I'm sorry, 7-day chart. You guys can see here. Liquidity, I mean, we were looking at this in the premium Discord because we were looking at potential short, or I was thinking like, hey, we're deviating above the high. We did not take this short because I assumed that because of the liquidations that we had sitting above, which were sitting at about, you know, 76.4, starting at 76.4, leading all the way up to $77,000, guys. That is the liquidity that we might be able to come up and take, sweep all this out, pushing us into the $77,000 zone. But because of that, we decided in the premium Discord to sit out of this short position. We came down, got the bounce off the value area high, and then came up to sweep some of this liquidity. Can we continue back up? You know, if we continue up, we could take that liquidity into these levels around $77,000. So this is the next major level of resistance sitting here between 77.3 and 76,938. So we'll see. I do think it's going to be very volatile. I am not holding any trades right now. The last trade I took was that short position, and then we got the bounce to the upside. So, you know, probably going to be some washer machine action here. So be careful out there if you're trading. If we see a nice setup, maybe we'll take it live. But yeah, as of right now on Market Cypher B, we have a 15-minute money flow crossover into the green, guys, with a 4-hour green dot now printing. This was another thing that was kind of making us sit out of that local short position here in the premium Discord, because I know with the volume profiles, guys, I know they play out more often than they don't, where when you come down to the lows, if you can get those bullish confirmations, you will see that price will likely get it into the POC and then eventually up to the value area high. But you can't just go off one signal. You have to understand the context of the market, such as money flow, higher time frame analysis, etc. And that, again, you know, we had this little bearish divergence on the lower time frames, higher highs, lower highs. But when we see that 15-minute money flow coming into the green here with that 4-hour green dot, that is one of those 1/16th Market Cypher B strategies, calling for more upside. So we sit out, and look at us now. We are pumping to the upside, making that good decision to not take the trade if you do not have all the confirmations. So we'll see if we can come up and continue to push into these liquidations and push into this next level of resistance. Let's see. Shout out to Melissa in the chat. What is going on? What do you guys think? Obviously, the predictions here are typically, you know, basically 100% accurate. We are at 98.9%. Yeah. Oh, baby. We are, yeah, guys, this is probably, I think if we're going to see an FOMC get super volatile, I think this is going to be it. Let's see. Shout out to Felix, said, hey, man, hope you're doing well. Keep smashing it. Shout out to Felix. Speaking of smashing things, guys, don't forget to smash that like button to help push this content. It's the easiest and most free way to help support this channel and get it pushed out to more new CandleMafia members so we can grow into an even more unstoppable force than we already are. Shout out to Tyson, says, how do you pull that Fibonacci extension? Shout out to Tyson. I believe I have a video on the channel talking about how to get those levels on your chart. But I'm not going to go super into it on tonight's live stream. But if you check the video on the channel, I go through kind of how you find those levels. And, you know, what Fibonacci extension levels you look at. I do have some obscure ones here, but the very, very common ones are the 1.618, the 2.618, the 3.618. Basically the normal popular Fibonacci levels, but the one version of them, the 1.618, right, instead of just the 618. So yeah, go check that out. First dump, then pump. Yeah, definitely could be the case here. I do think It's going to be pretty interesting. I do think it is. Frankie's a pro. Shout out to Zen. Hey, bro, let's get it. Fibonacci video. Yo, shout out to Tony D for grabbing that Fibonacci video. So there you go, bro. If you want to check that out, you can click there. I do believe I go over the extensions in that video. If not, I'll have to make one for the Mafia here. Let's see. So, yeah, as far as money flow, guys, like kind of what I'm looking at here, yeah, as far as what I'm looking at right now, 4-hour green dot, like, I have to assume with that 15-minute money flow crossover, oftentimes that 15-minute money flow crossover is where we see that bigger move happen. And this is a simple market cipher strategy. I don't trade based off this alone. I used to back in the day, and I've caught some really, really nice trades using this. But, you know, when you have that 4-hour green dot, that 15-minute money flow is 1/16 of that time frame. And then you're looking at the 4-hour green dot with the 15-minute money flow. And oftentimes that money flow is where you see the bigger move up start. And it does look like we are starting to push up here. Very, very nice. Let's see if we can hit that target up here. And again, we have the assistance of those liquidations. Remember, when you get stopped out or liquidated, when these shorts start to get stopped out or liquidated, it is likely, when shorts get stopped out or liquidated, guys, it creates market buy pressure, which means because they have to buy back their positions, right? So what that does is once the shorts get wrecked, you actually see the price push to the upside. And, you know, it's funny. I see a lot of people, they'll be like looking at the chart and then, like, They're looking at the chart and they see pumps, right? And they're just like, oh my God, it's a short squeeze. It's a short squeeze. When it, sometimes maybe it is. But I think a lot of people, I say this all the time. A lot of people just think like when price pumps, it's just a short squeeze, which is not always the case. Like you can actually look to see if there are shorts getting liquidated using things like order flow, looking at open interest, net longs, net shorts, seeing if those shorts are closing. There's ways to actually identify legitimate short squeeze. Every time price pumps, it is not a short squeeze. I see a lot of people out there talking about that, and I'm just like, so interesting. They're just like randomly calling pumps short squeezes, and I'm like looking at the order flow. I'm like, it's not a short squeeze, dude. Like if it was a short squeeze, you may want to short that move, right? Like wait for the shorts to get wrecked and then enter your short to profit. But that's really important to realize. Like you have to understand what you're actually looking at because, I see people call for like, oh my God, it's a short squeeze, and it's not a short squeeze. We're just seeing like market buy pressure. We have a lot of longs coming into the market. There's positive delta, which means it's very likely to see a continuation to the upside. And although you'd want to short a short squeeze potentially, if you're seeing a lot of buy pressure come in and there's positive delta and there's no reason to look for the short and it's not a short squeeze, you're going to wind up getting wrecked like that. So, we'll see what happens here. We will see what happens here as we push up into these liquidations. Let me actually mark these liquidations out really quickly. Let me drag this over to the other screen here. Come on, load up, baby. Okay, so let me go ahead, and I'm going to mark these off on the TradingView chart. And these liquidations are now sitting at, we've already tapped into the ones that started at 76,000. So that's kind of step number one. Shout out to the premium Discord, guys. We saw that play out beautifully. Let's see, 76.6 all the way. Okay, so the next kind of area of liquidations is 76.8 all the way up to about 77,000. So 76.8. Let me go ahead and mark these out. Bada boom. So yeah, just above this wick into about $77,000. There are your liquidations. If we wind up pushing into this box, guys, we may be able to see a decent candle just kind of, he's not that far away, just kind of pop, right? And I want you guys to pay attention to this because when we break this, we're very likely, it's not guaranteed, but we're very likely to see the candle start to break out after we break this level. A lot of people wonder, like, Frankie, how do you know, like, when you break a certain level, and this isn't the only way we do it, but, a lot of people will be like, how the heck could you possibly know that? And it's just by understanding where the liquidity is sitting in the market. And, like, once you start popping into these levels, like, you'll see things are probably going to start moving pretty quickly, and that is based off the liquidations as well as people FOMO longing into that move. Now, the problem with the FOMO moves, and this is oftentimes what we see happen on FOMC, that's why you see the washer machine price action, because a lot of people try to trade this crazy price action. You'll see the liquidations happen. All those shorts get liquidated, causing the push to the upside. And then as that push up happens, you have a lot of people entering long positions, now putting liquidity below price, meaning that when you get that short liquidation happen, we come up, and then now we have liquidity down below. So the shorts get wrecked, and then price comes back down. And when the longs start getting stopped out and liquidated, that causes a big push to the downside. And that is literally what causes those washer machine kind of moves in the market. It's very important to realize that there's a lot more to TA than just simple patterns, right? Like, or just simple, now patterns play out sometimes. They play out more often than they don't. Obviously, I keep track of those as well. I pay attention to them. I take them into account when I'm trading. But, there's much more that goes into trading than just a just a simple pattern, right? If it was just as easy as finding a pattern on the chart and then just like longing or shorting it and making $1 bazillion, like it's not. Trust me, I've tried every single strategy out there, guys. I was a big pattern guy in my early days when I was a beginner, thinking like I fell into the trap of thinking like that was the get rich quick scheme, and it's not, right? You start longing bull pennants, right? And then if you trade for long enough, you realize like, hey, the last like 7 bull pennants I just randomly longed wound up faking me out and then taking off. And all of that stuff is actually identifiable. You can actually see when a pattern is more likely to play out or not by looking at the actual order flow, understanding where liquidity is, and using some of those more advanced features, techniques. All right, let's see. Bitcoin will reach 80K soon. I do think, I mean, let's talk a little bit more. Let's go a little bit more bull time here. So obviously, those are kind of the local targets, but I will say this, guys, $79,000 and $80,000 are kind of, I'll pull up the another kind of key level that we have above us right here is a spider line. This is a logarithmic spider line sitting at about 77, 150, 160. So again, we do have a lot of confluence up here, a lot of resistance coming into this zone. So we do see a liquidity grab or a liquidation hunt, right? We come up, we liquidity grab here. That could be a call for a pullback, right? And again, not calling for zero, just like yesterday, right? I was in that short position. We make money on these moves, guys. Yesterday we looked for the short, we have it play out. Beautiful move. It's the same thing. When we get a push like here, I can't look for longs. If I was looking for longs, they'd be down here, right? So I can't look for longs here and just randomly long the top of this move. So for me, it's either wait for a move up, to wait for some kind of signal to look for another short, not to zero, but another cool off, right? Because even if we get something like that, we can make a ton of money off of that. And as a day trader, that's literally what we do, right? I'm not selling my spot bags up here. I'm just taking a little scalp short. We can make moves up and down, right? Absolutely beautiful. I'm not in a long position here, but that's okay, right? All we need price to do is move. We don't need it to move in a certain direction. We don't need to move it, obviously the more it moves, the better. That's why I always say, like, if you're out there, you want to be a day trader, you want to learn how to scalp or, what have you, you have to understand that, like, you can't chase moves, right? Like, I don't care. Like, if this rips up to 80K, like, I don't care, right? If we pull back and test support and get bullish confirmations here before we go to 80K, you can catch a long here. But for me, I don't catch the longs here. So yeah, for me, it's like looking for shorts or simply waiting for a pullback to find a new long position. But we'll see, guys. We'll see. I'm kind of happy I'm not in a trade right now because it gets pretty crazy, right? Like, we get those liquidation hunts, and it's just crazy. You get stopped out of your positions. Let's see. I don't short a bull market. Yeah, shout out to Jay Jeweler, right? Like, for the most part, it really depends on what you're doing, right? For me, I trade full time here, right? Like, I do this every single day, so like I can sit at my chart and catch this little move to the downside, right? And make a decent amount of money off that. But in the grand scheme of things, if you have a full-time job and you're looking to catch big swings, you're going to be much better off in a bull market. 100%, Jay Jeweler. I agree with you, bro. If you're trying to catch swing trades or swing trading your spot bags or you're just using low leverage, trying to catch those bigger moves, you're going to have a much better time trading with the trend on a higher time frame, right? So I do short in a bear market, but it's only for scalp positions. That's where the context of the market comes in. Absolutely key. You have to know what the context of the market is. Like, when I'm looking for shorts, it's on a low time frame, right? And we're looking for higher lows and continuations up. So I am taking profit. This already hit final TP here and then played out a little bit more to the downside, right? So it's all about context. But yeah, for the most part, if you're out there longer term trading, you're gonna have a much better time, like, just being long, waiting for pullbacks, being long, going for pullbacks, being long, waiting for pullbacks, right? 100% you want to keep with the trend, which, by the way, guys, is 100% bullish here. As we have that bullish market structure, we talk about this all the time. Bullish change of character, higher low, higher high, break a structure to the upside, break a structure. We just keep going to the upside, which is absolutely beautiful. And just based off of this alone, right, money flows in the green on the higher time frames as well. At that point, you are going to be just better off looking for, longs on pullbacks. For me, I capitalize on the little shorts, but I am being very conservative with shorts, greedy with the longs, right? We may hold a long from down here for a really long time, but catching these little shorts on the pullbacks. As long as you understand those little pullbacks are going to be little in a bull market, or even just, bull market's relative. I look at the bull market as the 4-year cycle bull market type deal, which most people, I think, do in crypto. But a bull market could be just considered like an uptrend on a higher time frame, right? So like, this is bull market, this is a bear market, right? But mostly bull and bear markets, I think of like super macro. Bitcoin is obviously in a macro bull, macro bull market from inception. But like, here we are obviously, this is especially with all-time highs, we are obviously in a bull market here. So the trend is your friend until the end. Let's see. Let me pull up into the local time frames here. Looks like we're starting to push back up. All right, she's trying to break into these liquidations, guys. I'm telling you right now. We'll see what happens. Crack this level. Could get the bing bong up into these higher resistance. Let's see. Who let the bulls out? Shout out to shout out to the clap, bro. Shout out to the. Let's go. All right. Let's see. Bada boom. Are you going to watch the FOMC? Yeah, we will pull up the we will pull up the Tony D is getting ready to drop a super chat with the decision, so I don't have to fumble around with all the tabs. So he's going to drop the decision, as I'm sure, like, usually the chat's able to get it before I am too, because we're talking, and then it comes out and someone puts it in chat. But yeah, and then, yeah, we will watch the live stream just a little bit, and then we'll keep an eye on the price action as well. All right, let's see. Will there be a Bitcoin Federal Reserve? Shout out to Albin. Shout out to Albin, not Alvin, but Albin. But yeah, let's see. Smash that like button, guys. Shout out to Barman. Why is my text so small? I'm gonna make my text bigger. Yeah, shout out to Barnum says hello. What is going on, bro? Welcome in. But yeah, let's. I mean, we got a couple of minutes left until this price action starts getting probably going to start getting pretty crazy. So I'm going to pull up the low time frame here, take a look at the 1 minute, and see what we can get going here. Shout out to Jumper. What platform do you use for money flow? Well, he asked me. I'm not asking him. I use Market Cypher. If you are interested in checking out Market Cypher, you can use my discount code MCFrank20 if you want to save some money on it. If not, you can just go to marketcypher.com or marketcyphertrading.com, I think it is. But yeah, this is Market Cypher B. It is a paid indicator. But again, if you want to save that money, you can use our code. So yeah, there you go. That's what it is. Market Cypher B. Very simply. All right, here we are. Pushing into the liquidations here. Let's see if we can get the push. Can we take a quick look at GRT and Polkadot, bro? Yeah, shout out to Arlen. Oh my God, you guys are trolling me with the names here. Arlenido. Shout out to you, bro. Hopefully I didn't butcher that too much. Oh my God, we took those stops and fake move to the upside. Oh baby, she pushed into the liquidations. Oh, there we go. Okay, it's starting, guys. It's starting. We're getting the SFPs, the pumps, the dumps. It is beginning here. All right, let's see. JPal has a couple longs. Let's go. You're the best, Frankie. Shout out to Arlenito. I hope I'm not butchering your name, bro. I am not the best. You are the best, bro. But I appreciate you so much for being here, man. Let's see. Boom, baby. Checking out the 1 minute. Oh, God. The volatility is incoming, guys. Volatility. She's heating up. Should we pull up like we did last time? Should we just pull up the EXO charts on like the 10 second? Oh, God. I'm going to pull up the 10-second chart here on EXO charts. Probably going to take a minute to load here. Let's see. Send it to the moon, baby. Send it to the moon. Shout out to Little Story. He said, do you think that using patterns is useful or not? Here's the thing, right? I talk about patterns all the time. The problem I have with patterns is you have a lot of like influencers. Like I see this on like TikTok a lot. Like even some people on YouTube. Like their patterns are legitimate, right? Like I teach patterns because they're not useless. But the thing I want people to understand about patterns is that it is not as easy, right? Trading is not as simple and the reason I say this is because when I was a beginner, I fell for that trap. Trading patterns is not as simple as just seeing a bull pennant and then just like knowing you can long and make money. And like when you start to teach people that, you're kind of selling them a false dream, right? Unless like you don't know how the market actually moves, you're kind of selling them a fake dream, right? Because again, are these going to break out a higher percentage than they're not? Are they going to play out the way you want them to more than they don't? I don't know what the actual percentages are out there. There's a lot of different ones, but they will play out more often than not, but like not all bull pennants are created equal. It depends on like what your delta looks like up here. Are there more longs or shorts? Because a lot of times you'll see on bull pennants, I talk about this all the time. Interest rates lowered. Tony, what is it? Is it 25? Okay, 25. Okay. Let's go. Okay, so that has been baked into the price. That may give us a little bit of a dumpski here. There it goes. There it goes. Oh my God. She's dumping, baby. She's pulling back. She's pulling back. We got to pull up the 10-second chart here, guys. Oh, no. Oh, God, guys. This is, oh, God. It's starting. It's starting, baby. It's starting. Thank you for that update, Tony. I appreciate you. Dump, then pump tomorrow. Oh, baby. Oh, baby. Oh, God. All right. Let's see here. But yeah, just to kind of just wrap this up, right? Not all patterns are created equal. Very simply put, I'll come back over to that 10-second chart in a second. When you see these bull pennants, right, a lot of times what will happen is you will see them, they'll either fake to the upside and then you'll dump, or they'll fake to the downside and then they'll rip, right? So a lot of retail pattern traders that just look at this pattern and think it's that easy, oftentimes they'll long down here and then they'll get stopped out of their trade and it'll go the direction they want. Or it will break out, right, the way they want it to, and they think they're going to make a bunch of money, and then it just fakes out to the downside. And this has everything to do with liquidity, and that's why I don't look at patterns because, and I do look at them, but I'm able to look at the order flow and understand what is more likely to happen within that pattern, right? So, at the end of the day, once this winds up faking up and then breaking down, what is that going to look like at the end of the day? To me, I would look at this as a volume profile. Right, I see consolidation, right? Sure, this could be bullish consolidation, but if it's not, I could catch a short here from the top of the value area high and then, make money and not just get faked out by that arbitrary pattern. So I do pay attention to them. They are legit. I do teach them. They're worth paying attention to, but you can't trade them alone by any means, in my opinion, right? Because at least I've tried it. I know a lot of people try it. Like if you talk to someone who trades like liquidity concepts or uses volume profiles, there's a reason I don't trade patterns alone anymore. Sorry, I got excited. Shout out to Tony D. But yeah, let's see here. Let's see here, guys. Getting that little push to the downside. We never grabbed that liquidity, though. So I don't know. We'll see what happens. Let's pull back up extra charts here. Bada boom. This is the 10-second chart. So, keep that in mind here, guys. It's just exciting to see the candles move like crazy. I'll take a look at the 30-minute chart as well. We'll hide some of these. All right, let's see. We did hit a chart date value area high here, so we're at resistance for sure. ETH pumping. Thanks a lot, mate. Shout out to Little Story. Yeah, hopefully that makes sense for you, brother. Yeah, that's the thing, right? Like I'm not gonna FOMO short this, guys. This is like because once he starts talking, you're gonna get rips and dips here. This is very, very hard to trade, very difficult. If we find a good setup, and I think it's a good trade, I will take it. Shout out to Thompson said, why are you excited if it dumps? Shout out to Thompson. He said cringe. I don't know why that would be cringe. Because the simple fact of that is, shout out to Thompson. I assume you're new to crypto or new to trading in general. The reason we get excited when it dumps is because we can make money when it dumps, bro. And it's just exciting price action. But yeah, a lot of people get confused about that. Like, why don't you care that it's going to dump? Why are you just calling for the moon all the time? Well, the reason for that is because we know, based off the technicals, when it's going to dump. So I'm not going to call for the moon if I think it's going to dump. And then when it dumps, we oftentimes make money on those moves, like yesterday on the live stream. So there you go. Hopefully it helps you out, bro. Let's see. Should I sell my BTC right now or hold? Oh, shout out to Alabin. I mean, I can't tell you whether to buy or sell or, sell your Bitcoin or hold it. But I would say, I'm not selling my Bitcoin here. I'll tell you that much. But yeah, you got to make your own decisions there. Let's see. It's hard. It's like hard with the shorts, guys, because like people just get mad when you say the price is gonna go down. But like if I make $1,500 on a small push to the downside here, like I'm not gonna take that money, right? Like $1,500. Like I used to have to work so long to make $1,500. Now I could just short Bitcoin. Again, it doesn't mean I'm bearish. I might be bearish on a low time frame, right? But it doesn't mean I'm bearish forever. So and again, for most people, for the long term, you're probably better off longing Bitcoin if you're not like a day trader or a scalper, right? But for me, like if I can make $1,500 here, $1,000 here, $1,500, like I'm just going to grab those moves up and down. Trading is not about just wanting price to go up, at least technically trading. So there you go. Yeah, shout out to Rag Capital said, Law, Frank, he's like, sell if you're I'm not calling him dumb. No, never I would say that, but shout out to Rag Capital. Yeah, I'm not selling my Bitcoin here. This is like in my opinion. Let's see. Oh, shout out to Ken. This is not financial advice, guys. Just some crazy guy on YouTube here. Shout out to Ken though. Just sold his house for Bitcoin. Let's go. Let's see. So do I have a short prepared? Right now, I'm not in any shorts. I don't have any shorts. Yeah, I would wait for. I have to wait for confirmation. I'm not in any shorts right now. Let's see. Shout out to Dave Digital said, I think the reason for that is this channel has never been in a bull run, so we've only made money in bear markets. Yeah, I mean, yeah, like I always say this to people, right? Like on this channel, guys, like if this doesn't make you want to trade, I don't know what will. Like most people have to wait for a bull market and then they leave and they make no money, right? And like you just have to wait to make money, right? Like we had a bull market and then on this channel, we made so much money on this dump to the downside. It's essentially another bull market. You get a massive move up, you make a ton of money on your spot bags, and then a massive move down shorting the market, right? Trading is not a make money only when price goes up type thing. It can be, and for most people, it's probably, most people are just long-term investors. So, but yeah. But it is funny. It's like people are like, Like, why the heck would you ever short? And I'm like, no, dude, no, it's, let me teach you. Let me help you. Let me help you. Let me help you. Let's see. You don't make $1,500 on small moves to the downside by just like getting wrecked in bull markets. It's not how it works. Let's see. Bada boom, bada bing. Yo, Jet said, sell your Bitcoin if you want to be poor. Yeah, that is kind of yeah, I mean, over time, that has kind of been the situation, right? You sell your Bitcoin, you know, even long term here, right? Like you sell your Bitcoin, you know, you're basically losing money here. You know, take a look at the longer time, higher, you know, price history here. Up and to the right for Bitcoin over time, right? Obviously, you kind of get the logarithmic regression here. But yeah, absolutely, yeah, over time, you know, Bitcoin has been going up and to the right for years. Let's see. Sell it, BlackRock. Let's go. Shout out to AI. AI music is everything, says Frankie loves bearish divs. Yeah, absolutely. 100%. And the reason for that is, I mean, shout out to the premium Discord. Like, the reason for that is you can literally spot these things on the charts, guys. Waiting for price to come up here, looking for not just the bearish divergence, but other confirmations as well. We wait for that bearish divergence. It comes in. Now, you don't have to get the full move, right? Like, this would have been a huge trade if we wound up getting the final move, but you have to lock in profits along the way, right? So we spot these divs. And like, if you're out there and you're thinking that, you know, making money when price goes down is like too good to be true, or like it's not how it works, please, for the love of God, let me educate you here. Looking for the bearish divergence, you finally get a setup. It was a pretty risky setup here, to be quite honest, because obviously we're pumping. But as long as you understand that and you're managing your risk, like trading is a game of risk management. The reason people think that like shorting in a bear market is bad is because they're looking at it through the lens of just taking a short and hoping price goes down forever, right? But that's not how you make money trading. That's why most people lose money trading, right? But understanding the context here, we take the short. Bada boom, you come to the value area high. We know this is support, right? So we're not just going to hold it forever. We're going to take profits here and lock in profits, move our stop loss to break even or in profit. And in this trade, guys, I made a bunch of money and then moved my stop loss into profit and then got stopped out in profit, right? So I didn't need it to play out in full. All I needed was for it to either play out in full or stop me out so I can make more money. And then we came down a little bit more. And then I don't remember, I don't know, what is it, 74.9? How low did we actually go? 74.4, right? So you get a little bit more profit, and then you get stopped out with your stop loss in profit. All right, let's see. Let's check out Ethereum really quickly here. Ethereum getting the rip. And guys, what did we say on the live stream for the past, I mean, forever, right? We kind of were looking at the level up here. Then we looked for the pullback into the range, right? And then we looked for another rejection, right? And then we got that big breakout. But this 786 has been labeled this forever, ever since back here, I believe. Doorway to $3,100 to $3,200. Are we about to make it, right? This is our key level. We get above this level, hold it. That's where we're going to see the bigger move up on Ethereum, and here we are getting above that level. Next levels on Ethereum for me are going to be $3,000 to $3,100. Once we get above $3,100, we could potentially move up into $3,500 up to about $3,700 and potentially beyond. But again, guys, we talk about this on the live streams almost every day. Lower area of consolidation, higher value area of consolidation. Once you break out of here, we are going to come interact with these levels. And then once we get above this value area low and hold it as support, we'll bing bong around. It might be messy, but we're going to be looking for that range to fill in full, right? And, you know, again, we talked about Ethereum as we were in that consolidation saying, hey, guys, once we break out of here, we could get it. Now, you know, if we continue down, I would have loved to come grab this liquidity, but you're not going to get what you want 100% of the time. You get the breakout. You know this is your key level to get above to see higher prices. And where are we? Simply, the market is always seeking fair value. You leave here, you're going to seek out the fair value above, right? More often than not, unless you just kind of create a new area of balance here. But more often than not, you will seek out those previous areas of balance. This is how we make these calls, guys. A lot of these other coins as well, like WIF. We looked at WIF on the live stream the other day. Let me find the actual chart. Was it the Bybit chart? I think it was on the live stream. Let me pull up the actual live stream chart. So WIF, maybe it was the Binance chart. Oh, man, am I not going to be able to find this WIF chart? Maybe it was here. Where is that chart? Dang it, where's the chart, guys? Where's the chart? Oh, here it is. This is the one. Okay, so what were we looking at here on WIF? Last time we looked at WIF, guys, we were approaching the value area high. If we held this as support, we were just going to bing-bong around these two value areas. Why do I know that, right? Well, just simply put, zoom out a little bit. You see, fair value. When you leave this fair value, you're going to come in and work with this fair value. This value area low is going to be resistance until proven otherwise. Once you break above this value area low, the next likely place for price to go is going to be the POC. Right here, you get above it, POC. You lose it, you get above it, POC. You go back down to the value area low, back to the POC, you lose it. Then down here, you see if you see bullish confirmations, you can say, hey, if we get accepted into here, you'd be looking lower. But if you have bullish confirmations, which on whiff we did, you'd be looking for a bounce. Where's the next likely place for whiff to go if it gets a bounce? And this is exactly what we looked at on the live stream. Said, hey, look at the doorway to higher prices above. Whiff comes up, bing bong, resistance until proven otherwise. Once you get up here, flip this to support. That is where you're going to be looking for the POC. Flip the POC. You can look to fill the range in whole. It's the idea of auction market theory, right? The price is always seeking fair value, and you could create new value as well, right? We're starting to create some kind of new value here, which actually was also a previous area. So you're always going to be creating, looking to go bing bong around in these ranges. Like, this is just how it works, right? And on these live streams, it's like, a lot of people are like, how the heck? Like Frankie has a crystal ball. We might have a bagel blaster. Guys. But I don't know, crystal ball. I don't want the FBI coming to raid my house looking for a crystal ball. But yeah, like it really, it's just understanding how the market moves, right? And when you start to understand this, you know where to pull those ranges from. You know those key levels to look at. You're going to know where price is likely to go. Right? There's a reason. It's not just like we get lucky guesses here, right? I'm basing all of this off of information. And sometimes you can have a sound. We could have seen bullish confirmations here, looked for a bounce up here. Sometimes you're not going to get the move, right? Sometimes the TA just doesn't play out. But to be quite honest here, the TA has been very rarely not playing out. It has been absolutely slapping lately. FOMC looks similar to FOMO. Shout out to Naive Faith. Yeah, or Native Faith. Yeah, for sure, bro. All right, let's see. Money cannon at 77K. Let's go ahead and check back in on Bitcoin here real quick. Bada boom. Let's see. Yeah, we'll see. We'll see if we can break back in here. We'll blast that bagel cannon. Let's go. Can you show me the volume profile settings? Yeah, shout out to Alex, no problem. These are my volume profile settings. It's almost all default. Are we going to watch Powell in 15 minutes? Yes, we are. We are going to watch Powell in 15 minutes. Shout out to Darren Does Things. Let's go. Show some love for the mods in the chat, guys. Shout out to Holy. I can't see. Yeah, second word. Shout out to Holy. Says, what is the confirmations that you look at on order flow? Shout out to you, brother. This is something we cover more in the premium Discord. I teach this stuff in the Discord. It really depends on the situation, right? And I highly, right? Obviously, we crush in the premium Discord, guys. But it's never ever going to be as easy as just finding one thing that you look for to enter a trade, right? And sometimes it is that easy, but the context is always going to change, right? Like if you come into a key level, in one case, you might be looking for one confirmation, and then in another case, you might be looking for a different confirmation, right? Now, when it comes to volume profiles in a very basic way, what I like to look at as my first kind of starter confirmation is I like to look for bearish divergences, right? Because that calls for a very likely pullback in some form or fashion, right? Now, it doesn't mean you're going to zero, and this is basically what I was looking at and how I was able to catch that short from up here, right? What was I looking at here? Well, very simply put, if the volume profile will just, go ahead and print. There we go, right? What were we looking at here? We were saying, hey, if price deviates above this value area, and we start to get bearish confirmations, which obviously we had, low time frame confirmations were the 30-minute bearish divergence, right? You have higher highs on your price action, lower highs on your momentum waves, right? And then we say, hey, let's zoom into a lower time frame and see if we can catch an entry here. And then you can go down to the lower time frame, and this is typically where I look for order flow confirmations, but you can even see here, you even have a 5-minute bearish divergence, right? So you can say, hey, if this 5-minute bear div is going to give us a little pullback, and we have a 30-minute bull div also looking to print that's going to play out bigger, maybe we can catch an entry here and ride this thing back down. Where are you looking to take it to? Well, we know we're in a bull market. We know we're in a massive pump, but we know we might just cool off. And this move on a leverage trade can make you plenty of money, right? Now, again, I did not take I took partial profit here. I did not close the full trade down here, but at the end of this trade, I was up $1,400 in a day. Right? So, if you were to close this at the bottom, again, I got stopped out in profit, so I made a little bit less. But, I was hoping I locked in my profits and went to sleep, right, with guaranteed gains, and then saying, hey, if we come back down to the bottom, we can make a ton of money. If not, we get stopped out for money, right? We make money. But, the key level here would be to ride this down to the value area high, right? That's where you take profit, lock in profits, move your stop loss, and then if you get stuck underneath here, you can hold that guaranteed winning trade. If you get stopped out, you make money. If you continue down, that trade continues to run. Right? But if you're not managing your risk and you're just shorting up here in a bull market and hoping price is going to go to zero, like you're going to lose your money every single time. You have to understand what you're doing, but it's never going to be as easy as like once you see this exact thing here, you have to take the trade. You have to wait for price to come in, identify the situation and analyze the situation, assess the situation, as I like to say, and then you're going to be looking for different confirmations almost every single time. So it's different. But, generally, that's kind of what I like to look at to start things. Like, how did I know we were probably going to at least cool off a little bit here? 30-minute bear div, lower time frame bear divs. We also had money flow. There were many things we were looking at. But it takes time to learn. You're never going to be able to really, and I'm not saying, shout out to I forgot who asked this question, but I'm not saying you're thinking this. But anyone out there that thinks you're just going to be able to, come in and, look for one thing on every single trade, think about this. If that were the case, no one would have a job, right? You would just code a bot, right, to trade that thing, and you just make money infinitely. You have to have that. You have to understand what you're looking at and have that personal discretion, right? You have to. You have to know, like, hey, I'm getting a confirmation here, but I don't like the way that the 3 hour looks, right? You have to understand what you're looking at. It takes time to learn. You could 100% make tons of money in this market. You can get rich trading, but it's not just going to be the easiest thing you ever did. It's not lay on a beach, hit buy and sell. You have to know what you're looking at, and it takes a long time to learn. But yeah, once you figure it out, it is the most rewarding thing in the world. Like I said, and this was like a small little scalp for me. But like I said, like even this smaller trade, like when I closed this for $1,500, which we do very often. Like I said, I made anyway, 600. I'm getting stopped out in profit because I wanted to keep the door open for potential more downside. But you close this for $1,500, guys. Like back in the day, I used to work a really long time to make $1,500. The fact that I can, I had to go through like the ringer to get here, but coming out on the other side of this, it's like eventually you get to the point where like it's hard work and it takes a long time to develop the skill. But once you get there, it's like sometimes I have to scratch myself, right? Like sometimes I get pissed off when I make 1,500 instead of 5K in a trade, right? And sometimes that trades in a day, right? But sometimes I have to like pinch myself and be like, dude, you're pissed off because you made $1,500 today, like. Remember like where you were like a few years ago, dude. Like, and that just goes to show that no matter where you are in your journey, those emotions are always going to come in. So yeah, that's kind of my little 2 cents on that. Let's see. Live stream link is pinned. All right, let's go ahead and pull this live stream. Let's see what Powell is doing here. Let me pull up a refresh here. I'm going to pull up my face cam really quickly here, guys. I'm going to try to set up the screen so we can take a look. Tony, take a poll if people want to take a look at the charts and the live stream, just the charts, or the charts and the live stream at the same time. I'm going to pull up a split screen here. Let me mute this really quickly. And let me see if I can pull this up on a bada boom. Oh, wow. It's only 2:12. Shout out to Tony D. I thought that was like, oh my God, it's 2:30. Hurry up. Shout out to Tony D. Yeah, take that poll here. All right, let's see. Are we going to pump and then dump and then pump? What the heck are we going to do here, guys? Let me pull my screen back up real quick. There we go. I don't think I was showing my screen there. Tony D, I need to get another monitor. I have 3 monitors here, guys. I have a horizontal monitor, I have a vertical monitor with chat here, and then I have an ultra wide in the middle. I feel like I need another horizontal here just for OBS. Let's see. In the meantime, let's see how many likes we can get. Yeah, guys, smash that like button. Smash it, break it, kick it. I don't care if you touch it with your butt, fondle it. I don't care what you guys do. I'm not looking. Just touch that like button somehow. Let's see. All right, yeah, let's see if we can get that pullback. Well, let's actually look at the charts here, right? What are we getting now here? Okay, there we go, right? Okay, so we do have some bearish divergences forming here. 45-minute, the 1 hour as well. Looking to print that bearish divergence here. Could that give us a continued pullback? Potentially. But here's the thing, guys. With the volatility of FOMC, from a technical perspective, this to me would be like, hey, bearish divergences, right? 30-minute money flow. This is, 30-minute bear div also printing with money flow kind of flat here. But if we get an 8-hour red dot, which is looking to print, I think if we get a move to the downside, this 8-hour red dot printing with the 30-minute money flow crossing into the red is probably going to be the thing if we get a bigger move down. But here's the thing. With FOMC, we could dump here and then, wind up getting a crazy volatile move to the upside. So, I wouldn't trade this the same. If this was a normal day, I'd probably be in a short from up here already. But because of the volatility, it could be a little bit more risky. So just keep that in mind. I got the stream on a cinema projector, and Frankie's head in full size is too much. Shout out to Ken. Shout out, just scare you. You're like in a 100-inch screen, just like, what's going on? Will I open a position on the live? I mean, maybe we could take we could probably take a position if we find the setup. But I typically, let the dust settle on the FOMCs, guys. Again, it's not about like if you feel like if you want to get along, right, and like you're leverage trading out there as well. By the way, if you guys want to leverage trade, or learn how to leverage trade, definitely watch the free content on the channel here, guys. Before, we have the premium Discord, obviously, but there's so much free value on this channel teaching you guys about trading, about technical analysis, about how to use leverage responsibly. I actually dropped a little lesson in the Discord today about how to actually use leverage as a risk management tool. Yes, trading leverage is super risky if you use it as a gambling outlet. There's two ways to use leverage. You can use it as a degenerate, right? Which, nothing wrong with that. You're probably going to lose your money, but, to each his own. If you go to Vegas, go to Vegas with money you're fine losing. Treat leverage trading, if you're using it as a gambling outlet, the same way. I don't recommend doing that. But you can literally use, like I was in a 90x short yesterday, and someone in the live stream said, oh my God, Frankie in a 90x short, what the heck? Where's the risk management? And the truth is, guys, that 90x short was the same risk that I take on my 5x shorts, right? There's a lot more to using leverage in a responsible way than people think. Leverage is not just gambling. If you think leverage is just gambling, it's because you're just looking at it that way. It's all about your position size and your risk. If your stop loss only allows you to lose 1% of your account no matter what, it doesn't matter if you're using 100x or 5x or 1x, right? You're still only going to lose the amount that your stop lets you lose. So if I got stopped out of that 90x short, I would lose only 1% of my account, right? Whereas if I won that trade, I would make way more than that. So it doesn't matter. High leverage doesn't always necessarily mean more risk. In my case, it means the exact same risk. But you have to understand how that works. Maybe I'll make a video about it for the channel for you guys. It's very important to realize, like, leverage trading is not risky if you know how to trade. It's only risky if you see it and you're treating it like, oh my God, all this free money I can borrow. That's how you lose all your money. But yeah, let's see. Oh wow, that's so weird. Shout out to Holy. Yeah, it's funny because I literally just said that exact thing you said. But he said, yeah, you're just saying it in a gentle way. Yeah. And also, yeah, like if you think leverage trading is gambling, you just don't know how to use it. That's it. It's like the same thing with like options, right? Like those were literally made to manage risk and hedge your bets. Let's see. Smash that like button twice from both accounts. Smash the dang like, people. BTC will pump. If you want Bitcoin to pump, guys, smash that like button. If we want to blast this bagel blaster today, we are going to have to smash that like button. Yeah, 4-hour money flow. Shout out to, who said it? Kush Patel. Yeah, 4-hour money flow is, yeah, see, here's the thing. Yeah, the money flow is technically coming out here, but with that green dot and the 15-minute money flow coming into the green, yeah, I mean, we're honest. To be quite honest, guys, like the technicals, like they are still going to be in play here. But if you see a bearish signal on market cipher B, like if it doesn't play out, it's not going to be shocking. It's not going to be shocking on something like FOMC. Like I said, typically I like to let the dust settle, and I like to tell people, like, if you don't trade often or you're new to trading, like, just sit these days out. It's crazy. There's crazy liquidity hunts. It's better to just sit it out. Like for me, could I take a trade here and degenerately long and short this and see which one plays out? Yes, but I can manage the risk, right? Like I'm not gonna get liquidated for my whole account if that happens. But I don't. It's kind of irresponsible to say that to new traders, because new traders are just gonna think like, oh, I could just long here and make $1 million. It's not that easy. We make it that easy in the CandleMafia on the Fred Candles YouTube channel. I make it that easy. Try to explain things in as simple as possible for you guys. It's just like for normal people to understand, right? I'm a normal person. I know leverage, margin, all these like crazy words, liquidity, all this stuff seems super like over people's heads. But let me tell you guys, I am not like I'm a normal person, right? I'm not like I always say this, I'm not like some algorithm science. I'm not some scientist. Like I am a normal person, right? And I think a lot of these words, liquidity, margin, like all these concepts are very complicated, but they don't have to be, right? Like a lot of people explain them in complicated ways. I think maybe a form of gatekeeping. But yeah, like what is liquidity? Liquidity is just money in the market, right? Like, and when we refer to it, we're just referring to stop losses and liquidations. But a lot of people just can't trade naked right now. It's too cold. Yeah, shout out to Shunzin. Put that stop loss towel around you, bro. Frankie is the 0.01%. Yeah, shout out to Red Capital. That's the other thing too. Like, if you guys see me like up multiple $1,000s on a day trade, like you have to understand, like this has to do with the size of the account that I'm trading, right? Some of the accounts are even smaller. We don't make that much on all the accounts. I have all different accounts for different things, right? But when you see someone like Frankie Candles, right, or like some YouTube, like when you see influencers, like a lot of these influencers have bigger accounts, right? Like you're not going to be able to put $100 in a leverage account and make 5K in a day. Could you 100x long and like catch a huge move like that? Yes, but that's slot machine, right? But what you want to do is focus on percentages, right? Like growing, making 5% on a $100,000 account is the same thing technically, trading wise, risk management wise, as making 5% on a $100 account. So practice getting those consistent percentages on a small account. And with reasonable stop losses, not risking $100, 100% of your account. You can't risk if you're going to put $100 into a leverage exchange to try to flip that into a 50K. The chances of that happening are slim to none, right? But what you can do if you want to actually change your life and be a trader and maybe do this full time one day and fire your boss. What you do want to do is put that $100 in and just say to yourself, I'm going to donate this to the leverage to the market. I'm going to put this in and I'm going to try to grow it. I'm going to risk $1 on each trade. If you have a $100 account, I'm going to give you some sauce here for beginners. If you have let's say you have $100 to throw into an exchange. If it's more or less, just change the decimal places, right? If you have $100 that you want to put into an account, right? Let's say you want to just take a stab at leverage trading. You want to see if you could become profitable over time. You're not looking to get rich overnight. Put $100 into the account, right? And then risk 1%. Maybe 2%, I would say. Maybe just stick to 1% to practice really tight risk management. Risk 1% on each trade. That means that when you get stopped out of a trade, you can put all $100 on each trade. You could put $100 on 10x leverage, right? Which will raise the position size, so you could trade with more. You could put the whole amount into the trade and 10x your $100, trade with more money, as long as when you get stopped out, you only lose $1. You can't put $100 into an account, put $100 on the trade on 10x leverage, and then just run it with no stop loss, right? Or even 100x leverage with no stop loss, right? You just have to make sure every time you lose, you're only going to lose 1% of your account, right? So for $100 to be $1. You can put $100 on the trade, but your stop loss is only going to allow you to lose $1, right? A lot of people think like, oh, well, if you're putting $100 on the trade, aren't you risking $100? No, because you're using a stop loss. The stop loss will only allow you to lose $1, right? So you can trade with all the money. You just can't lose all the money if you get stopped out. 1%. That's what I recommend, right? So there you go. But anyway, ETH is pumping, baby. Let's check it. Oh, yeah. Okay. All right. Yeah. Shout out to who said that? Yeah, shout out to Flavor said, yup, this is the way to skip demo trading and get emotions of having skin in the game. Yes, and listen, is demo trading great? If you check out Femex or Blowfin, if you guys want to sign up and use our affiliate link, you can. The links are in the description down below. But they both offer demo trading, which is a one-to-one simulation on the exchange, so you can get used to how leverage works. You can mess around with it, try a 100x trade with no stop loss, see how it works. You'll actually learn with fake money. But I do recommend, if I traded on demo, I could run that thing up to like $75 billion, right? It's different because you have no skin in the game. There's zero risk, right? Trading is the opposite of that. There's a ton of risk in trading. So I do recommend, if you're going to trade, practice on demo if you don't feel comfortable, but if you have $100 to just donate to learning, put some money in the account, right? Because what that does is it gives you the actual emotional challenge of what trading actually is, right? Not only the emotion of losing the money, but also the emotion of potentially making the money, which is sometimes worse. The FOMO of missing out on gains is sometimes worse than actually losing money. So yeah, shout out to Flavor. I would 100% agree with that. Bada boom, bada bing. Thank you so much, family. Shout out to Riot the Warrior. Hey, we're just spitting facts here. I want the Mafia to actually make money, right? I don't want you guys to go load up 100x on with no stop loss and like gamble. I mean, if you want to do that, that's totally fine, as long as you understand that's gambling, right? And I just don't promote that. It's about emotion, real money versus demo. Yeah, absolutely, absolutely. Here we go, baby. Here we go. All right, let's see. 2:30, baby. 2:30. Here we go. Let me go ahead. I'm gonna pull up that face cam and see if I can set up the screens here. I'll let the audio run for a second for you guys. Bear with me. What was the poll here? Okay, so everybody wants to see the live stream and the chart. So let me go ahead and set this up for you guys real quick. I'm not going to talk.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. In the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned
Need
to
money
deal
flowing
with the
around
risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
Where do we take that liquidity?
We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Dang, long. Dump it.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Yo, shut up.
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
Chair Powell, Nick Timros from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long bond rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent. And if they're material, then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem
it's brutal listening to it.
Given where we are now?
Shout out to Golden.
You get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. People are.
If I'm understanding,
let's talk about the data we've got.
I feel like I'm gonna get in trouble for talking.
So
because we got Professor.
In the main, the economic activity
data
Professor
Money
have been
Printer
stronger
here, but we'll
than
see.
expected. The NIPA revision was stronger. Certainly, the September employment report was stronger. The October report not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular. And so overall feeling good about economic activity. So I think we would factor that in. At the same time, We got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
Some local bearish CBD here on the high.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted?
We don't fill out an SEP, and I can't characterize one that wasn't filled out today, so I can't really speak for kind of exactly where the committee is. I will just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points, and we're asking ourselves, is that where we need to be? You know that we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September and in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, I'm going to wait. We're going to wait and see how things come in December. I mean, it's just. I would put it this way: we're on a path to a more neutral stance, and that's very much what we're on. That has not changed at all since September, we're just going to have to see where the data lead us. We have a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but I would say, I would say that again, we didn't update the SEP, so I'm not going to characterize where the committee would be.
Howard.
Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate and explain a little bit the 2 changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress. And in the second paragraph, dropping the sentence that the committee again greater confidence.
And I care about what you have to say more, Frankie, than what he has to say. I'll be honest, guys.
2% goal.
This is important. Obviously, we get a lot of volatility, but to be honest, if I were to trade this, I'd be trading this on the chart.
Is it meant to open the door to
I don't typically have like
this
this
open? Is it meant to communicate anything
this.
about the stickiness of core inflation the last 3 months?
Shout out to
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test.
If you guys want my personal opinion, I do lean
the first rate cut, right? And
if we took this liquidity up here, I'd probably be
that test in September, and therefore we take that
bear
test.
divs and money
leave
flow,
it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in that. In what I've said, the path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go. And I think there's a fair amount of uncertainty about that. And you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
This would look good if this 15-minute money flow was not.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates, and is that are rising deficits a concern to you?
So we don't comment on fiscal policy, and again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax laws. Doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outlines, so we'd start to model it. And then we'd wait, and then at a certain point, the staff would brief the FOMC and say, you know, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we'd try to get smart on that, and then the law actually passes. And you know, you'd start to put it. You'd probably run an alternative simulation before that happens, just to keep people.
Guys, he said it. It's a simulation, guys.
It goes into the model.
He said it.
Along with a million other things.
I knew it. Elon Musk was right.
We have a very large economy. Many things are affecting it at any given time. And, you know, a law change of some kind would go in there, but it would go in. But it would, you know, it's a process that takes some time.
AI music, I would ask him if he holds Bitcoin.
It takes a lot of time. And, of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect? And, you know, the overall effect on the economy at any given time. So I think that's a process that takes a lot of time and that we go through all the time with every administration, constantly. And this will be no different. But you know, right now there's nothing to model right now. It's such an early stage. We don't know what the policies are, and once we know what they are, we won't have a sense of, you know, when they'll be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time. And it will be very much regular order when we do that.
If I could just follow up on Nick's question, are the current rates something you feel like you need to lean against in that they go against the direction of policy by adding restrictions to the economy, or do you just take them as a given and perhaps a signal that you should do less?
I just think the first question is how long will they be sustained? If you remember the 5% 10-year,
we live in a matrix. Frankie is Neo.
Massively important conclusions, only to find 3 weeks later the 10-year was 50 basis points lower. So it's material changes in financial conditions that last, that are persistent, that really matter. And we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now, it's not a major factor in how we're thinking about things.
Chris.
Thank you, Chris Rugaber at Associated Press. You mentioned the positive economic data that we've seen since the September meeting, including the revisions to things like savings, higher GDP growth. We saw stock market jump yesterday.
Come on, Powell.
That's renewed some of the questions about why do many cuts at all in this with this backdrop.
So you're right. As I mentioned and as you mentioned, the latest economic data have been strong, and that's of course a great thing and highly welcome. But of course, our mandate is maximum employment and price stability, and we think that even with today's cut, policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate. And we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago, and we judged, as I mentioned, that it's on a sustainable path back to 2%. So the job's not done on inflation. But if you look at those two things, we judged in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress, and today's decision is really another step in that process. Overall, as I mentioned, we believe that with an appropriate recalibration of our policy stance, we can maintain strength in the labor market even as our policy stance enables further progress toward our inflation goal.
Great. And just to follow up, what might cause you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
So we haven't made any decision like that at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively, as we approach levels that are plausibly neutral or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset purchase, with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down.
Have to start throwing.
And so we're thinking about it that way, but it's something that we're just beginning to think about.
Oh, it's fixed, baby. It's fixed.
Edward. Thanks, Chair Powell.
Thanks, Chair Powell.
With the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think if you look at the 3 and 6 month, you're quoting the 12-month. So we look at all of them, right? But if you look at 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect there to be bumps. For example, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is, I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing. We're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact, and it won't be 1 or 2 really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path between the two risks.
Shut up, the Kazakh involvement. Catch-up inflation making me hungry.
Powell, Craig Torres from Bloomberg. 2 questions today.
Shout out to Skywalker.
Did you learn anything about what Americans think about the economy from the election results? First question. Second question. I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate, Chair Powell. So the unemployment rate has been at 4% or higher for 6 months. One of the broadest measures of unemployment is up about 0.5 point from a year ago.
In the house. What's going on?
Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. So you have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one,
we don't have a lot of time. I got to go back and play Fortnite.
You know, this is the great question, and so when we think about it all the time. So I'll just say a couple things. You know, there's nothing really surprising here. What we know is that the unemployment rate is low. We also know
Dave,
that
it's come
down significantly. Moved up significantly from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool. But it seems to be in a good place.
This is brutal. You're used to my
pace.
This is
designed to keep it in that good place, to maintain the strength in the labor market, while also enabling further progress on inflation. You know, you mentioned a bunch of
we should give him some lessons, guys, like on-camera presence. Come on, pal. Come on. Sit up, bro. Bring the shoulders down. Relax a little bit. All right, listen, guys.
Unemployment rate is back.
The economy is screwed.
I would characterize it more broadly as normalizing.
Bitcoin to the moon.
You mentioned wages. Wages are still running
Who's the grandma talking on the
just a bit above where they would need to be to.
Yeah, it's live. We could go back a little. Oh no, we can't. We can't
unless
even
productivity is going to remain at this high
halfway.
level. If we see productivity, you know, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you can say it the other way. That wage increases are now consistent with 2% inflation, given current productivity
Powell hitting the
readings.
Trump dance would be crazy.
You know, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the
Trump
longer-term trend. That has always been the case for 50 years. But you know, it may be that we're now 5 years. If you look at
we got to get the YMCA on the soundboard,
that came out a month ago. We're 5 years into a nice set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market. We could talk about 20 different data series. We'll be looking at all of them, of course. You know, we don't want the labor market to soften much from here. We don't think we need that to happen to get inflation back to 2%.
Victoria. Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Mike?
Michael McKee from Bloomberg Radio and Television. You talk a lot about what the data are telling you and how you are dependent on the data, but in terms of forward,
whoever she works for is she's either getting a promotion or she's getting fired.
What are you hearing from CEOs or other officials around the country?
Oh yes, Mr. Paul.
What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards?
James,
does that match up with what your forecasts have been and what you think the appropriate policy path should be?
So it's hard to characterize
room
a really
even
interesting
quieter.
set of
Who thought that room could get quieter?
Of course, you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much a discussion topic in their worlds, whereas 2 years ago it was all they were talking about. So they feel like the labor market's in balance. people feel good about where the economy is. Demand is obviously pretty strong, and you're seeing
shout out to Dave Digital. I did not know
growth
that.
in the third
EGT goes
quarter
out of time.
estimated.
Did not know
maybe
that.
the year's 2.5. This is a strong economy. It's actually remarkable how well the U.S. economy has been performing with strong growth,
Shout
and
out to
strong
Dave.
labor
I
market,
will,
inflation coming down.
not sure what I'm doing Sunday, but I'm going to try to do that. I did not know that.
Really performing better than any of our global peers, and I think that is reflected in what you hear
How did I
from.
not know that?
What I hear people hear from CEOs. I don't get to talk to a lot
Not gonna
of
lie, guys.
CEOs
This is
in my
pretty
job,
lackluster.
But I hear what others
lackluster. I thought he was gonna
summarize
turn the
from
money
those, and
printer
of
on.
course
We're just
I hear
gonna go to
Reserve Bank
80K.
presidents do a lot of that, and it's pretty constructive overall. Now, that's not to say there are areas of caution and things like that, but ultimately, overall, pretty positive.
To follow up the areas of caution, if there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's things like clearly geopolitical risks around the world are elevated, and just as clearly they've had relatively little effect on the U.S. economy. Now, that can change through the price of oil or otherwise, but people talk about those as something that's on the horizon all the time. But ultimately, if you look at the U.S. economy,
Come on, Grandpa, make money go.
Its
Let's
performance has been very good, and that's what we hear from business people, and expectation that will continue. If anything, people feel next year. I've heard this from several people that next year could even be stronger than this year.
Andrew.
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and
100x long,
Volcker,
100x
spoke up
short,
loudly when they thought large budget deficits endangered economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget deficits and debt at historic highs that are rising. Is that
Guys,
something
maybe
you
if I
speak
walk
out
away
against?
every time I leave,
I have
Bitcoin
said
moons
many
or doubles.
times, no more, no less than
We're gonna trick
the
Bitcoin right now. I'll be right back.
predecessors,
I bet you Bitcoin
mentioned
moves.
have said.
I'll be right back.
And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that in, you've got a very large deficit you're at full employment, and that's expected to continue. So it's important that we, that to be dealt with. It is ultimately a threat to the economy. Now, I can say that. I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions, just said it again.
Okay, thank you. I guess the other question is, to follow up on Victoria's question, do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Courtney. Courtney Brown from Axios. In response to Howard's question, you said it wasn't an ideal time to give forward guidance because of the economic uncertainties. Can you lay out what some of those uncertainties are and whether or not it includes some of the proposals that the president-elect has put out on the campaign trail? Tariffs, for instance?
No, I was not referring to the new administration's policies at all, nor will I today. So what I'm just saying is, as we look ahead, we know, and I mentioned this in my statement, that the risks are two-sided. I guess I should start by saying that we think that the economy and we think our policy are both in a very good place, And but as you look forward, you say, what are the risks? And one risk is that we would move too quickly and find ourselves having moved too quickly, and inflation comes back, and we lost our chance to get inflation back to 2%. So we have to avoid that risk, and to avoid that risk, that means you want to move carefully. The other risk is that we move too slowly, and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So these two things are the two risks that we have to manage. And so we're in the middle there. We try to be in the middle and deal with both of manage both of those. Again, the idea is to support the strength we have in the labor market and in the economy, but also with somewhat less restrictive but still restrictive policy, enable further progress toward our 2% inflation goal. This is a thing we're meeting by meeting, we're going to be making our assessment of what the right path is. It's not as important, the precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now to a sense of a more neutral policy.
All right, guys, looked like the hand snip did something. Looks like the hand snip did something there.
We're pretty sure it's below where we are now.
Got a couple of hand sniffs in, maybe it'll pump Bitcoin.
There will be more uncertainty about where that is, and we're going to move carefully as this goes on so that we can increase the chances that we will get it right.
Simon.
Thank you, Chair Powell. Simon Minovich with The Economist. I know you don't want to share your decomposition of bond yields, but if you look at the break-evens,
it'd be really good for engagement or really bad.
Longer-term inflation expectations do seem to have risen up at about 2.5%, for example, on the 5-year. That's up half a point from when you cut in September. Do you have any concern at all that longer-term inflation expectations are de-anchoring, or put another way, are anchoring at a slightly higher level? Thanks.
So we would be concerned if we saw.
Oh gosh, should I put Mrs. Candles back in, guys?
Longer-term inflation expectations anchoring at a higher level.
The
That's
doll
not
was
what
more
we're seeing.
lively
We're still
than
seeing
Powell.
between surveys and market readings, broadly consistent with. I looked at the 5-year earlier today, and it's probably moved, but it's just not. It's kind of right where it's been, and also it's pretty close to consistent with 2% PCE inflation. So that's one that's been a traditional one that we look at a lot. But overall, expectations seem to be and really have throughout this in a place that's consistent with 2% inflation. But you're right to say we watch that very carefully, and we will not allow inflation expectations to drift upward. But that's really why we reacted so sharply back in 2022 was to avoid that.
Kelly.
Hi, Chair Powell. Kelly O'Grady, CBS News. We just talked about what you've heard from business leaders on the economy, but many average Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
So you're right that we say the economy is performing well, and it is, but we also know that people are still feeling the effects of high prices, for example. And the world went through a global inflation shock, and inflation went up everywhere, and it stays with you because the price level doesn't come back
emojis
down.
in the chat.
So what that takes is it takes some years of real wage gains for people to feel better. And that's what we're trying to create, and I think we're well on the road to creating that. Inflation has come way down. The economy is still strong here. Wages are moving up, but at a sustainable level. So it's just I think what needs to happen is happening, and for the most part has happened. But it'll be some time before people regain their confidence and feel that. And we don't tell people how to feel about the economy. We completely respect what they're feeling. Those feelings are true. They're accurate. We don't question them. We respect them.
And just a quick follow-up, President-elect Trump has been critical of your performance. Any concern about his influence on the Fed's independence?
I'm not going to get into any of the political things here today, but thank you.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. What is your plan if we start to see stagflation?
Well, so that's the whole plan is not to have stagflation, so we don't have to deal with it. So that is actually our plan. It's of course a very difficult thing because anything you do with interest rates will hurt one side or the other, either the inflation mandate or the employment mandate. I would just say that we've been able to see inflation come down a whole lot, much closer to our goal, without the kind of sharp increase in unemployment that has often accompanied programs of disinflation. So, knock on wood, we've gotten this far without seeing a real weakening in the labor market, and we believe we can complete the inflation task while also keeping the labor market strong, and that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but that's certainly not our plan. I mean, our baseline expectation is that we'll continue to move gradually down towards neutral, that the economy will continue to grow at a healthy clip, and that the labor market will remain strong. If you look at our that will not change from the September SEP. You know, that is our baseline forecast, and short of some exogenous event, that will continue to be our forecast for the foreseeable future. So, but ultimately, you know, we're not in a world where we can afford to rule things out a full year in advance. There's just too much uncertainty in what we do.
Let's go to Jean for the last question.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to go back to a comment that you had made about Americans being quite unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime so people have a chance to catch up?
No, that's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And you know, part of the problem there is that low inflation can be a problem too, in a way. But that's not part of our framework, and it's not something we're going to be looking at in our framework review. Thank you very much.
All right. Well, guys, I walked away. Mrs. Candles came in. We sniffed the hands. We pumped it a little bit, but dang, that was thank God. Thank God that is over, guys. Thank God that is over. Let's get this out of here. All right, that was brutal. That was absolutely brutal, guys. Check free Discord announcements, please. Shout out to Tony D. All right, let's see what we got going on here. I will check that in just a minute. That was absolutely brutal, guys. We got a 1-minute bearish divergence outside the value area. We're going to zero, baby. We're going to zero. Am I showing the chart here? Am I showing the chart? That was absolutely torture, guys. Shout out to Mrs. Candles. Thank you for coming in there and helping us out. You are a wonderful, wonderful. I could not have asked for a better partner. Mrs. Candles coming in here and just posing like Frankie Candles is gone. Little did they know. I was off to the side, sniffing hands, pumping the market, baby. All right, let's see. Pump us up with a fire song. Cardano to the moon? Question mark. Give us the signal, Batman. You guys, we gotta those smash the like button if you have not already. Maybe we gotta bring Mrs. Candles on more. Spam those hand emojis. Maybe the candle emoji. I don't know. We gotta figure out a way to pump this market because great TA still fire. He'll sing the pump song. Sing the Jason Casper pump song. Shout out to Clay the Great. Probably wouldn't sound as good as when he sings it. I'll tell you that much. Let's see. What is going on with Caspa? Let's take a look. Caspa. So here's the thing, real quick, before we move on to Caspa, guys. If we do get a push up, just understand that liquidity is sitting above. So once we break this, still is the level where we could see that push into that $77,000 level. Discord announcement, please hang on one second here, guys. Let's pull up the Discord announcement. Let's see here. Am I going to get trolled? I feel like I'm going to get trolled. He had to get off, guys. He saw we were live, and he had to get off. I got to go check out the Frankie Candle. He needs to know, should I long or should I short? I don't even know what the heck I just said. Oh, God. Shout out to Tony D. Tony D with the memes, baby. Let's go. Shout out to J Powell. J Powell in the chat. Jay, let us know. Let us know. Hit us up with a chat. Let us know you're here. And put some exclamation marks on your chat here so it's not, hello, I'm here. But there you go, guys. There you go. Shout out to Tony D for that. Oh, the new little bubble track? Is there a new little bubble track? Poor guy's just learning how to public speak. Shout out to Tony D. Yeah, did he have any like media training at all? You got to wonder. Let's see. Shout out to Golden said, let me sell a few coins and surely the market will go up. Happens every time. Shout out to Golden. It does feel like that sometimes, right? But there we go. Mrs. Candles came in, gave us the extra pump to the upside here, guys. Let's see what happens. Now, my overall thoughts right now, guys, I will just tell you to give you a little bit of an update here. Also, shout out to the Frankie Candles Frankie Candles Essentials here, guys. Again, you can't trade this as signals, but this is just going to kind of let you know what I look for. And when you're getting those bearish signals outside of value area, looking for a return back into the range, back down to the value area low, and vice versa. Worked out pretty good for that range. Again, you can't just use this as a buy and sell signal, but it will help you know kind of when I start to look for longs and shorts. But my overall thought here, guys, let me pull up a clean chart here real quick. My overall thoughts here. Again, that liquidity sitting above, looking to come into that liquidity here. That is likely, if that does happen, that could push us up into between 76,938 up to 77,300. That's going to be kind of that next level. I do think pushing through that liquidity would kind of give us that big pop candle. But for the most part, just kind of general overview here, I will say. Let me just hide all of this. Bada boom. I will just say, right, overall, the 4 hour, right? Now, obviously, Bitcoin is ripping. Still trying to be a little bit more conservative with the shorts, right? If I do take shorts, they are scalps until proven otherwise. Like here, scalp short, was holding a portion of it in case we went lower, but we didn't. I get stopped out. I make money. I get stopped out in profit, right? We're making money whether we get stopped out or not, more often than not. But just like up here, if I take a short, I will be treating it as a scalp for a potential continuation up, locking in profits early, moving my stop loss into profit. And then if it plays out in a bigger way, then awesome. There we go. That's beautiful, right? We just turn that single or that double into a home run. But I will just say this, right? Like 4 hour green dot and the 15-minute money flow crossover. The 15-minute money flow crossover did indeed give us the continuation up. But that 4 hour green dot is now confirmed. 2 and 1 hour bearish divergences, like to be quite honest, guys, like big thing I'm watching. 8 hour red dot, 30-minute money flow crossover. If that money flow comes back out on the 30-minute, which it's not really, it's the money flow's coming back up, I probably wouldn't really be interested in shorts right now until we take up that liquidity. Because that liquidity not only is going to give us a pop if we... Oh, there you go, guys. What do we say? There is that pop through those liquidations, right? We don't make this up, guys. This is real analysis. The reason the market actually moves. You break this level, you get the big candle because those shorts get liquidated. Not because we're breaking out, right? That's due to liquidations. There we go, baby. Happy all-time high, 76,886. Target acquired, baby. We had to wait till Pal got off the stream to start blasting that money gun, baby. Let's go. Bada boom. Unbelievable. Let's go. Right into the target here. Well, we just front ran it by a slight bit. Front ran that fib extension. But, yeah, there we go. Took the whole dang stream. Literally took almost 2 hours to get the push through those liquidation levels. But, well, there you go. That's why I was not going to be looking for a short until we took that liquidity, because not only is that liquidity going to give us a big thrust through that move, through that level, but also this liquidity acts as a magnet for price, right? So hopefully kind of narrating through this price action like, hey, could you short here? Yes, but I would rather sit on my hands because I know I have liquidity sitting above. So I will be watching this price action. This is the next zone to the upside, guys. The next zone to the upside, 76,938 to 77,300. If we continue up, this is probably where we're going to play. But you got to be careful. Once you sweep that liquidity, we could see a pullback based off of, and we might want to come tap that fib level first. But, once you sweep that liquidity, I'll be looking for SFPs up here as well as, some of these bearish divergences, right? These divergences are forming. Higher highs on our price action, lower highs on our momentum waves. Not looking for dumps, but could be potentially a little bit of a pullback, even if it's just a tiny pullback before we move back up, right? I am a day trader. I am a scalper. I mean, I swing trade too. I kind of do everything, but, I'm treating those as scalps, right? And then the bigger, if we are going to see that be a little bit bigger of a correction, potentially, if we are going to get a pullback a little bit bigger into this lower value area, I would be looking at the 8 hour red dot, eventually printing with that 30-minute money flow crossing into the red. But I'm going to let this play up here because of that liquidity. Shout out to Golden, said, help me, please. Shout out to Golden. What do you need, brother? Let me check. Did we miss a super chat or did we miss a chat from Golden? Let me see. Bro, what? Why did I say help me? He said heat map. I just literally glanced over a chat. It looked like help me, Golden. And Golden, I'm here for you, bro. I see anything that remotely looks like help me. I'm here for you, bro. I don't even read the whole thing. Heat map now. There's no way. There's no way that just happened. Heat map. Let's check it. Bada boom. Let me pull it up real quick for you guys. Let me update it here. Make sure it's all ready to go. Let's see. Bada boom. Come on, bada bing. All right, here we go. Let's see. Let's take a look here. We'll go with the lower time frames. Bada boom. Yeah, 77K. 77K is sitting at that heat map. I know it's kind of hard to see here. 76,955 up to, I would say, 7750, right? But if we push into this, understand it's going to give you that liquidation wick, right? Because as those shorts get wrecked, they're going to have to buy back their positions, pushing price a little bit higher than that. So that would mean, let me just get that exact number one more time. So that would mean if you start tapping 76, oh my God, this font is so small. 76,950. We start breaking past there, 76,950. We stop there, right? So we push above that. I would look for a push up. Maybe, depending on that is the thicker amount of liquidity. It is a brighter yellow box. I know you guys can't see it. And may be able to push us up a little bit more. But, I would be looking up here, 77,290. Let's see. Take a look here. Pull up the 30-minute here on Exo Charts. Let's see. What are my all-time high targets for Ethereum? I mean, guys, TI is magic, man. Not just looking at resistance levels, right? Like anyone can pull a fib, but finding that liquidity and looking for that quick push to the upside, right in there to sweep that liquidity, just plays out perfectly. And you wait for the target to get hit. We tap that fib. Maybe we get a pullback here. VWAP's coming down on these medium time frames. 5-minute money flow coming out. 3-minute money flow coming out. 45-minute red dot looking to print. We'll see. The only thing that's dangerous here is, again, if we come crack this high, could give us like a big push up. So even if I were to take a short here, it would be very, very tightly managed, right? Because if we break this wick, you're probably going to shoot up with that liquidation. Shout out to Campbell, said, noob here. How short from levels not even hit? Shout out to Campbell. I'm not 100% sure exactly what you mean by that. I'm not 100% sure exactly what you mean by that. How to short from levels that aren't even hit yet? I'm not 100% sure. I guess, like, if you're thinking about, like, if this level's going to get tapped, like, how could you short before you hit that level? Well, it depends. Like, we might want to come down first before coming up and hitting that level, if that makes sense. I'm not 100% sure if that is what you're saying. I'm a little bit, I'm not 100% clear on the question. But hopefully that helps you. But there we go. Swing failing these highs. Oh, baby. Oh, baby. Oh, baby. Oh, God, guys. Yeah, nice little SFP there. See what happens. 30-minute green dot still printing. Yeah, we'll see. I would say, like, opportunity to short here potentially off this, in my opinion, but not financial advice at all, guys. This is not financial advice. I'm not telling anybody to short Bitcoin here. I'm not short right now. I'm just saying. This is my thought process through the price action. This SFP could give you move down. But you do lie with a liquidity level sitting up here. So if you creep back up and break this wick, you could get a big push up, which shouldn't be a problem if you're managing your risk tightly. Right? If you get stopped out way before that happens, you should be good, right? Or that's how I handle things. But yeah, that is liquidity swept. See that push to the downside. Not too shabby. Let's see. Oh, shout out to Al Jr. He says, I think he's talking about setting a limit order. Yes, I don't necessarily recommend that. I personally don't do that. And the reason for that is if you walk away from your chart and you have a short setup put here, right, and you hit it and you get a little rejection, but you're not at the chart, and then you go up and grab that higher liquidity, then you're going to potentially just get wrecked on that trade, right, or stopped out. I like to see the actual confirmations pop in, right? I like to see that liquidity grab, look for the confirmation, and that SFP could be a confirmation that you could look at for that push to the downside. So with the divergences as well, right? It's not just one thing. Let me just see something here. Yeah, we just tapped this local value area high, right? Higher high into the value area high. Absorption. Get some absorption up here as well. Longs entering at the top. FOMO longs could be putting liquidity down below. This is exactly what I was saying. The idea of a liquidity sweep. The shorts get wrecked, pushing price up. The FOMO longs come in, and now the liquidity is down below. And that's why you get these big pushes up and these big pushes down. The shorts get wrecked, and then the longs funnel in, right? And their stop losses go below, right? And then once price comes back down, those shorts get wrecked too. And that's why you see these big wicks. But yeah, could be a push to the downside here, especially with those divergences maybe. But again, it is a little bit risky because of that liquidity above. But if you're managing risk, it should be no problem. For me, if I take a short here, I get stopped out for a small loss and we go here, it's not a big deal to me, right? I'm not ruining an account or anything like that, right? It's a small loss for a potential much bigger gain. It's all about risk management. Oh, Highly Trained said, no, man, he doesn't understand how you found those extension levels. So, yeah, guys, thank you for, could be either of those options. With the extension levels, yo, shout out to Darren Does Things. Yo, shout out to Rocky One, said, nice stream. It helped me get my short entry. Hey, shout out to you, bro. Shout out to you, man. But, yeah, as far as finding these levels from before price action actually starts, you can't. What he's basically saying, we think maybe, is you can't look left to find the resistance levels. So these fib levels, these are Fibonacci extension levels, right? And again, Tony D shared that video. Tony, if you could share that video one more time, for the fib levels, it'll show you guys how to pull those. I believe it's in that video. But yeah, they're based off Fibonacci extensions, and yeah, that's how you find them. It's like one of the only ways other than spider lines that you can use to find potential resistance that is when you can't look left, right? If that makes sense. Where is bada boom, bada bing, right? Oh, baby, we just front ran that spider line. Let's see. She's pushing in, coming back into the value area. Oh, baby. Come on. Frankie Candles Essentials. Queue up here. Queue up. There we go. Yeah, we'll see. Back onto that value area. Not too shabby. Could be a liquidity grab. Push to the downside. Let's go. Yeah, VWAP's coming down. Money flow, again, guys, like things are probably still going to be volatile even though the meeting's over, right? Like VWAP's coming down. Money flow's kind of fighting. Like to me, I would want to lean bearish here, like short term. But, you know, as money flow's coming up, even the 15-minute money flow's still coming up here. Hard to call. Again, for me, I could take trades like this all day because I could cut them when they're losing before I get wrecked, right? A lot of people will just kind of short here hoping for a giant move down, hoping to make a ton of money. That's why I say, guys, if you want to be a profitable trader, if you want to make money trading, stop trying to make money trading, right? Learn the skill of trading. Otherwise, if you're trading with a $100 account and you get into a position here, like you're gonna be limited on that small account on how much you can make. You would need a massive move to make any kind of significant amount of money off that account. But that's why I say stop thinking of money, right? Practice understanding where price action is going to go. You could always up the capital. But if you're trying to make a ton of money, like if you're I have $100 and you're trying to short here, for me, if I short here and it comes down here, I can make a good amount of money. But it's because I'm trading with a bigger account. So just keep that in mind. But if you have a small account and you make $3 here, but your account is $100, that's 3% of your entire account, right? So you have to be willing to take that $3 win and take it as a win. And just accept the thought that, like, hey, I'm trading with a smaller amount of money. It's harder to make money. But if you learn that skill over time, eventually, if you supply your account with more money or fund your account with more money, or you get a funded account, or many other ways that you can get more money to trade with, especially nowadays, like with funded accounts too, are like pretty interesting, even though it's a little bit of a interesting business model. But 3% on a $100 account is not a lot, but 3% on a $100,000 account is a lot. Right? It's the same thing, right? So just keep that in mind. Like when I talk about moves, right? Like I can't make $1,500 on this move with $100, right? Unless you're just gambling and hoping that you don't get wrecked, which I don't recommend. So just keep that in mind. Let's see. Borrow from Frankie. Shout out to AI Music is everything. Yeah, I mean, we do giveaways. Just stack all the giveaways in a trading account. Let's see. Shout out to Mark Dutch said, thank God mine's a grower. Shout out to Mark Dutch. Shout out to Zeus the DJ said, couldn't you take altcoins' previous price action to determine where the next price of Bitcoin will be? Take that percentage of the move and add it to the current price of Bitcoin. Zeus, I don't think so. Not to my knowledge. I wouldn't do that. You're dropping straight facts. Shout out to JJ. Yeah, let's go. Absolutely, bro. The Godfather shorted from the high, baby. Let's go. What is the smallest amount of money you recommend to start trading with? It really depends, right? It depends on everyone's different situation, right? Like, how much disposable income do you have? If you're starting to trade, I would recommend that the money you put into the exchange for the first time, you would have to expect that that money is going to disappear, right? Over time, learning from your mistakes. Because even if you have the best analysis, even if you have the best setups, 100% win rate strategy, which does not exist. I want to make that clear. If anyone's telling you they have 100% strategy that you can use and just print money easily, they're lying to you. But even if you had a 100% hit rate somehow magically, if you're new to trading, those emotions and that discipline is going to eat you alive, and it's going to be very difficult. So, for me, like the amount of money I would recommend, just understand that, like, if you put a small amount in, you're not going to get rich overnight. But you're not going to get rich overnight if you take your $5,000 in savings, $10,000 in savings, whatever you have, and putting that in on 100x leverage. You're not going to get rich doing that either. You're going to lose your money doing that. I promise you. Not every influencer will tell you that, guys, because it's not beneficial to them, right? But I want you to actually be safe. I want you to actually learn how to trade. This is why I don't do a signals group. My Discord, I show the setups, I show what we look for, and then we only take the trade when we get the confirmations. I teach you how to fish. I don't just pretend like you're going to get rich quick and then just take your money and then you lose your money. That's not how I work here, right? I like to give free value. I don't like to gatekeep, and I like to actually turn profitable traders. I like to help people actually make money. And when I see those chats of people catching trades off of what they learned and making money off of what we learned, that's what I get off on, right? Not trying to like get people into a Discord to make a ton of money and then pretend I make money trading and just like put on this facade, right? I like to be as authentic as possible. It's very rare in crypto. A lot of people are just like, yeah, I don't know. I just like to, I'm never going to tell you that I have an indicator, guys. It's not a buy and sell indicator. It looks, right? Like I could come up here and say to people who don't know better, right? I could come up here and be like, guys, get my, if this is free too, right? And it is fire. But if this was a paid indicator, I could come up here and be like, guys, look, you got to buy my indicator for $1,000, and you could just wait for these signals, but sell. And then you can't lie. Look how good it works. Look how good it works. Then you come down, another signal, massive long, make money here, make money there. And is that what happens? Like, are these signals actually printing? Is the price action actually playing out like that? Yes. But you can't tell people that you could just trade like that. Like, you could go try that on a demo account. Just try to trade any indicators, just random signals. I used to think that, right, with things like any indicator, like even market cipher, like, oh, I'll just wait for, like, if you just, like, oh, I'm going to figure this out. I know 98% of people fail, but I'm going to figure it out as a noob, right? I think, like, oh, red dot, short, price comes down. Green dot, long, price goes up. Like, I'll just do that and be really disciplined and make a ton of money. It's not that easy. Like, try to do that, and you'll just know it's just not how it works, right? So, I could do that, but I don't. I tell you, I'm honest, right? Like, you can try it, right? But you're going to get into a short. It's going to come down. You're going to come back up. You're going to get stopped out. Like, you're not going to know that there's liquidity sitting up here. You don't understand really what's going on. You're just going to wind up, oh, my God, then you're going to close the trade. Then it's going to come down. You're like, oh, my God, no, short. Oh, no, wait, oh, my God, long, right? So I actually like to teach you exactly how to trade, right? Exactly what to look for instead of just, like, selling out and, like, my products, I like to create actual value, right? Not just, like, yeah, not like, anyway, I like to give it away for free. And it is fire, right? Like, people say that, a lot of Mafia members will literally say, Frankie Candles Essentials is a money printer. And if you know what to look for, it can really help you make a ton of money. But if it was that easy, guys, I would just put a bot on this and go just do whatever I wanted every day, which probably would be trading. But, shout out to Rag Capital said, join the Discord. Yeah, shout out to Rag Capital. That's how I like to promote my products, guys. If you do want to sign up for the Discord, it is in the description down below, or go to frankiecandlestrading.com. We now accept crypto as well. So if you guys want to get in there, you can check that out. Let's see. Shout out to Crypto Gang says, what are your candlestick confirmations before getting into a trade? There's many different things I like to look for, but a specific candlestick pattern would be like a swing failure pattern. But again, like, you know, I would say like a swing failure pattern is like one thing that you could potentially just enter based off that one confirmation, right? Because SFPs are very high probability, right? So like what happens here? Sure, you get the divergences outside the value area, but if you don't understand that you probably have a lot of people shorting up here, right, and you have some liquidity sitting above, you might be like, oh, hey, maybe I'm going to come up and SFP this wick here. What happens? You come up, you SFP the wick, and then you get the move down, right? But if you're not aware of that, right, like you're probably going to have your stop loss right here, and you're going to get stopped out. So there's a lot to understand about the market, but, there's many things. It depends on the setup, right? Like every setup's different, right? Sometimes you might look for a trade. Sometimes you might look for a trade and there's no possible SFP, right? So like you wouldn't look for a swing failure pattern in that case. So it really depends on the context of the market, but SFP is one of them. Like I said before, divergences are another thing where I look at for like looking for the start of a correction. Let's see. Shout out to Ficade. Shout out to you. How do you get those indicators for free? This one, Frankie Candles Essentials. Just come in here, type in Frankie Candles, right? And you'll see it here by Lux Algo. Shout out to Lux Algo. I highly recommend their paid indicators as well. You could check them out. But, yeah, this one's free. You can get this, no strings attached. Just click this, add it on your trading view. No email, no nothing. So there you go. Best Discord ever. Shout out to John Santos. Yeah, we have fun in there. We crush it, too. Yeah, Tony D said prices increasing very soon, so get in now. Yeah, so we are going to be increasing prices, guys, probably next week. Very soon. I said that a while, but we are putting a time on it now. Probably sometime next week we will be raising the price. But if you get whoever's in the Discord will get grandfathered in at the current price. But it will be going up in the next week or so. Probably let people get their paychecks if they wanted to get in. Like we'll give it till like maybe so probably sometime next week. People asking how to sign up. Can you show them? Yeah. So what I would recommend is either using the link in the description down below or going to Frankie Candles. Not that. Frankie Candles. Trading.com. I got a lower third for this. FrankieCandlesTrading.com. Check it out. Okay, I typed it in wrong. I was like, oh my God. I was like, it's down. Tony, the website's down. So yeah, just come to FrankieCandlesTrading.com. You guys can come down here. It comes with, it is not a signals group. It is not a signals group. I repeat, not a signals group. I do not tell you when to buy and sell. We make money. We do make money. We catch fire trades. Absolutely. But I will not just say buy here, sell there. I share with you my trade setups, what I'm looking for, confirmations. We do 2 live streams a week. I'm super, super active in there. And yeah, the live streams are pretty intimate, at least as of right now, as there's obviously a lot less people in the Discord than there is on the premium live stream. But yeah, you guys can check out here. We have all different types of plans. You can pay with regular dollars. You can pay with crypto, USDT, whatever you want. So yeah, go check that out if you guys are interested. But again, I want to, not a signals group. You're not just going to come in and it's going to be like there's 50 just buy here, sell here signals a day. That's not what this, I don't believe in those. I don't think they're beneficial to the trader over time. You will learn a ton while also getting trade setups. And I trade them. I explain the price action to you guys. We do recaps. Super, super valuable. Come check it out. And then also if you guys want to check out any of our other deals, you just scroll down if you're looking for a place to trade. BingX, Blowfin, or BingX, Blowfin, Femex. All our deals are here. If you guys are looking to get some tools or find a place to trade, you guys can check there or use a link in the descriptions down below to save you money and help you learn how to make money trading crypto, whether price is going up or down. But guys, we'll see what happens here. We'll see if that SFP of the highs, or not the SFP of the highs, but that liquidity grab here. Well, yeah, SFP of the highs here on the 30-minute. Right? Little swing failure. Can we get a bigger move to the downside? We'll see. If we do, if that was the SFP, right? I will say those divergences could assist us in coming down, right? It's like that local confirmation was the SFP. Please note shout out to Tony D. Important, guys. If you pay with crypto, you will not automatically renew over time, right? Every month, right? If you use regular dollars, not USDT, if you use regular fiat, right, through like PayPal or whatever, you can go on auto renew. If you use crypto, you have to re-sign up every month. But you could always do like the 3-month, right? There's like biannual, 6-month, annual, whatever it is. You could always just buy like chunks at a time if you want. Let's see. Is there going to be a Black Friday deal? There probably will be a Black Friday deal. However, it won't be as cheap as this price. It'll be somewhere in between the price now and the higher price. It'll be somewhere in the middle. So still be cheaper to go in now. But again, again, I'm not here to like shill you guys something that's it's not a get rich quick scheme. I really want to turn people into profitable traders. So if you think you're just gonna get in there and it's a buy and sell signal, some people ask. Oh, shout out to Rag Capital again. I will just say, it is. If you're in, you get grandfathered in, right? So if you go, it's not you're just going to get this month for that low price. Like if you get in now, you just will always pay that price, right? So there you go. Let's see. Lifetime plan. Some people want lifetime plans. Yeah, that's hard. That's hard. We actually thought about doing that. Shout out to ULOS. It's not gambling, brother. Shout out to ULOS. We actually just talked about that. It's not gambling at all. If you think leverage trading is gambling, you don't understand how leverage works. You can use leverage as a gambling outlet, right? Like you can just crank your account on 100x leverage and lose all your money. But that's not how it works, right? That's not how leverage is supposed to work. Leverage trading is, in fact, not gambling if you know how to trade. So the only reason you think it's gambling is because you don't know how to trade, which is totally fine. You're in the right place, bro. Let me show you how. And actually, shout out to the Premium Discord. I just dropped a little video in there for them today showing them, because a lot of people ask me, like, Frank, you were in a 90x trade yesterday. Like, isn't that risky? Not at all. It is literally the same amount of risk as if I had a 3x or 1x trade in, right? The only difference that changed was the amount of money that I had to have in that trade to open it. Right? If I got stopped out of that 90x trade, I would only lose 1% of my account. If that was on 1x leverage and I got stopped out of the 1x leverage trade, I would have gotten stopped out for 1% of my account. It's the same exact risk. I might make a video about this because leverage trading is not gambling, right? It can be if you don't know how. But yeah, smash those likes up. Shout out to Jesse. Jesse, thank you for saying that, bro. Thank you for the super chat. Smash that like button. And shout out to you, Les. Like, this is, it's not, and I'm not, no hate to you, bro. My job is to educate and inform people. It is not gambling. If you put $100 and then crank the 100x leverage with no stop loss, that is gambling, right? Buying meme coins is gambling if you don't have risk management, right? Buying stocks is gambling if you don't know what you're doing, right? If you're not using stop loss or risk management. So yeah, it is, leverage is a knife to a fool. Wow, shout out to Holy. That's a good saying. But when you lose, it's gone forever. Shout out to ULOS. No. So yeah, let me explain this, right? Shout out to ULOS, right? Because it's a misinformation. If you have, let me just do this real quick. I'll do like a quick little explanation that I gave the Premium, right? I won't go as far in detail. But what the heck? If you have $100 in your account, very quickly, if you have $100, let me go ahead and let me change this to no arrow, right? So if you have $100 in your account, right, and you're using good risk management, for me, I risk 1% to 2%. I recommend people risk 1%, right? If you risk 1% of $100 on every trade, this means that every trade you lose, you will only lose $1, meaning you literally have to lose 100 trades in a row, 100 losers in a row, which is honestly pretty hard to do even with a bad strategy. The hard part is sticking to the strategy. But anyway, you risk $1 per trade. Any trade that you lose $1, right? So this is the sauce, guys. This is like not what people like think the sauce is, but this is the sauce, right? The strategies are fun and stuff, but like this is really what makes you make money, right? This is very important, and this is the part that everyone gets wrong. Like this is the part that makes traders lose money. So think of it this way. $100, you only risk 1%. That means that every time you get into a trade, your stop loss can only allow you to lose $1. So it doesn't mean that when the trade goes against you, right? So you're looking for a short, right? That doesn't mean when price creeps up, you move your stop loss. Because if you move your stop loss, you're now losing maybe 2% or 3%. Now you're losing $3 for that trade, right? But if you lose $1 per trade and you stick to that plan, you will only lose $1 per trade. You could take 100 trades for $100 and lose them all. Right? So whether you use 1x leverage or 100x leverage, it does not matter, right? As long as you're still only risking 1%. Does that make sense? Right? So when you go into your exchange and you say, where it goes to stop loss and take profit, let me see. Maybe I'll just pull this up real quick because this is important, right? Not a lot of people talk about this. This is... And I have a video. Tony D, if you can drop that leverage trading tutorial, the only leverage video you'll ever need to watch, if you could drop that in the chat, I talk about this. Watch that video, guys. It's extremely, extremely important. Tony, shill that video, bro, because this explains how leverage affects margin and how leverage actually works. So when you come in to put a stop loss in. Let's say, for example, you have $100 in your account. That means, well, let's just say here, $18,000. Let's say you have $18,000 in your account. If you want to risk 1% of that, you can risk $180, right? So let's say I want to put in a $50,000 position, right? $50,000. When I go to put in that stop loss, right? Just in general, I won't go through this whole thing, but like when you set your stop loss here, right? If let's say you have a $100 account, just for easy math, you can only lose $1, or let's say, yeah, this is going to be, I want to make it realistic, right? So if you have $100 in your account, you can only lose $1, right? So whatever, let me see if I can get this stop loss to like $1, right? So 01. All right, so let's say you have $500 in your account, just for easy math. Thank you, Tony. Pin one of those as well. Watch that video, guys. Let's say you have $500 in your account. 1%, that means you can risk $5 on each trade, right? $500 account, you can risk $5 on each trade. So when you come in to make the trade, regardless of the leverage you use, you can only risk $5, right? So let's say the trade is, let's say you're taking the trade. When you come in here, as long as this says the amount of money you can lose is $5, it doesn't matter if you're on 100, this is 100x leverage, right? Now, I'm going to go on, let's say 5x leverage, right? Let's do it 5x leverage. Bada boom. I was just making sure I wasn't in any trades there. Right? Now, price is moving here, so it changes. But if price wasn't moving, right, if I come in here, it's going to be really, really hard just because price is moving. But as long as this still only says you're going to lose $5 on that trade, it doesn't matter if you're on 5x or 100x leverage. What changes there is the amount that it costs you to open the trade. Does that make sense? So on 5x leverage, if I want to open up a $50,000 position, I need $10,066, right? 5x times 10 is 50, right? So if I change it to 100x, right, like just keep this, right? So $5, right? It's back to $5 because price is moving. I wish I could just, the reason this number is moving is because price is moving. So now it's $20, but it's because price is moving. But let's just say price is still at $5, right? The stop loss still says $5, right? If it moves, you have to adjust your stop loss to only lose $5. But as long as that says $5, whether you're on 5x leverage or 100x leverage, you are still only risking the same stop loss, right? And again, this is moving because of the price, but this just said $5. So whatever that $5 loss was, whatever that stop loss was, you have to set your stop loss there. At the end of the day, when you come into your stop loss, as long as this number only says that you're going to lose 1% of your account, whether you're on 100x or 5x leverage, it doesn't matter. You're still only risk. It's the same exact amount of risk, right? Same exact amount of risk. The only thing that changes is now on 100x leverage, I only need $559 to open that trade. So you can put, if you have $500 in your account, right, you could put around $50,000 on the trade. It doesn't matter if you put $500 of all of your account into the trade, as long as you're only risking losing 1%, right? Does that make sense? Let me know. Hit me with a hashtag value if that makes sense. That is why leverage is not gambling. Now, if you just oh, hey, I only have $500, but I want to put a $50,000 long in because I want to just trade with more money. And you put a $50,000 trade in with all 500 of your dollars in your account, and then you just let it rip with no stop loss. Of course, you're going to lose your money. You're gambling, right? But that's not how you're supposed to use leverage, right? It's just how people use it if they don't know how to trade, right? This is how you make money, right? This is why 99% of people fail in trading, right? It's because they don't understand how to keep their money. This means, I'm going to blow your mind. This means that, again, at the example of $100, you would literally need to lose 100 trades in a row to blow up the account. That is very unlikely, even if you're guessing. Right now, are you going to grow the account? If you're just guessing, probably not, right? It just take a really long time. You can lose so many trades in a row and not blow up your account. So that is why it's not gambling. Hopefully I explained that. Yeah, like this would be risky, right? This would be risky, is if you just put your whole account on 100x leverage, no stop loss, right? You just take that stop loss off, right? That is gambling, but that is not how you trade. But the problem is, in order to have these tight stop losses, you have to be willing to get stopped out of your trade. Most people will say, hey, if I were looking for a long here, right? Let's say I'm looking for longs. Right? Let's say I'm looking for longs, right? I want to take a long here, right? I'm looking to ride that up to wherever I'm looking to ride it to, right? Most people, number one, your risk has to determine your position size, right? So if you have to go off a trading plan, right? If you don't have a plan in trading, you're going to lose 100% of the time, right? Well, not 100% of the time. You got lucky sometimes. But if you want to make money consistently trading, you have to have you have to have a plan, right? So like whatever your plan is, if you take a long here, I'm not saying this is the best trade, but I'm just saying if you're looking for a long here, where's your stop loss going to go, right? There's different calculations that you can do depending on, like, there's a million different risk management strategies. You have to pick one and stick to it, right? But depending on where this stop loss has to go based off your TA, right? Where's the invalidation for this trade? This is why I like stop loss. This is why I like SFPs, guys, because SFPs have a very clear invalidation point, right? So if I'm looking at this and I'm saying, and again, this is just a random example. If I'm looking for a short position here, right? If I'm looking for a short here and I take this based off the SFP, right? Let's say I get my entry here, right? We get the SFP, and I'm looking to ride it down to here. Let's just say a little scalp. My stop loss has to go right above that wick, because once we break that wick, the SFP is invalidated. I don't think we're going lower, and I have to get stopped out, right? But the size of this stop loss is going to determine how much risk you can put on the trade, right? Because if setting this 0.02 or this 0.2% stop loss makes you lose more than 1%, you can't put the stop loss there, right? You have to put it lower. But then it starts to get risky. So it's a whole thing. I'll make a video about this, guys. But this is important because leverage trading is not gambling. It 100% can be if you do not understand what you're doing. As long as this stop loss, when you put this into your calculator, it says, like, if I put 0.24 stop loss in here and it says, okay, cool, you're only lose 1% of your account, then that's cool. You're only going to lose 1%. You can take the trade, right? On 1x or 500x leverage. It doesn't matter, right? You're still only risking that $1 in your $100 account. And you can check this before you take the trade by going in here and saying, what would this 2% stop loss give me? I'd lose $10, right? So if you have a $100 or if you have a $1,000 account, you could risk $10 on each trade, right? So as long as this says 10 before you enter the trade, this is all confusing to you. As long as this number is 1% of your overall account, you can take the trade. And then you can lose 100 times like this before blowing up your account, right? And then if it gets deep. It's pretty crazy, right? Like, and then if you lose your account, right? If you start losing, let's say you lose this trade, if you then scale down your 1% stop loss with the account, what the account is down to, right? So if you have a say $100 account, you lose a trade, and then you have $99, right? And obviously there's fees and stuff too. But let's just say for easy math, you have $100, you lose a trade, you get stopped out for $1. Great job, you use good risk management. You lost the trade, no big deal. You have to lose trades, it's part of the business. But you lose that trade, no big deal. You lose 1% of the account, now you have $99. You can, if you want, just still do if you move that percentage down to only losing 1% of $99, and then instead of losing having your stop loss make you lose $1, it's like whatever cents, right? And you scale that 1% down with your account size, you have to lose I think 900 and something trades to blow up your account. Now, it's a slow bleed, but that's kind of how the math of it works. But more importantly, all the leverage does, it has nothing to do with the risk. Zero. Because if you use risk management, that's what calculates your risk. And if you don't do that, you're doing it wrong, right? So if all the leverage does is change the amount of money that you have in the trade, that you have to put of your own money in the trade. And you could even argue that higher leverage is safer in different ways, right? But again, watch that leverage trading video. It explains a lot of this, and maybe I'll make a new one talking about like my actual strategy and how I personally handle this stuff and how I calculate my actual risk. So there you go. But just in general, that is why leverage trading is not gambling, right? It can be. It 100% is potential to be, right? Okay, put it this way. If is buying a house gambling? Well, no, I guess that's a little different, right? It's not, I mean, it's all about risk management is really what I'm trying to say, guys. I'm trying to find a good analogy, right? Or a good metaphor. Like eating a cheeseburger is risky. But if you moderate those cheeseburgers and you don't eat 5 of them a day for 17 years, you're probably not going to get huge or die from a heart attack. If you eat if you eat cheeseburgers and fast food in moderation, once in a while, but you're overall healthy, you're kind of managing the risk on your health. Oh yeah, I have McDonald's sometimes, but if you degen out and just eat McDonald's every day, you're going to get fat and you're probably going to die early, right? It's just like leverage trading, right? If you leverage trade, sure, you could just go full degen and lose all your money, and that's gambling, right? But if you actually manage your risk, that's how you become profitable. So hopefully that it's a tool to help you, right? So there you go. And then, again, in that video, I talk about this all the time. I actually have 2 videos. I have a video from like over a year ago, I think, talking about this. But I made an updated one. So watch the updated one pinned to the top of the chat. This is, again, like let's say you have $5,000 in your account, right? Or let's say you have $500, or no, let's say you have $500 in your $5,000 in your account, right? If I have to put all $5,000 in margin on that trade, now I have no more money left in my account to trade with. What if I want to long Bitcoin and short Ethereum or short a Bitcoin, short another altcoin? I can't. I don't have all that money. I don't have any money, right? So what I could do is I could jack up the leverage, which will lower the amount of money I have to put on the trade, and that frees up capital for me to go deploy on other assets, whether that's shorting something, an altcoin. Maybe I want to open up a hedge short. Let's say I wanted to long Bitcoin here, right? Open up, let's say I want to open up a long, and we'll go on 1x leverage, right? And we'll just, in this particular account, I only have 18, or I have 18 grand in here, I think, or at least in the contract account, right? So let's say I put all this money on here, right? It's going to cost me about 18 grand on 1x leverage, obviously, to long Bitcoin here for $18,000, right? So I can open that long, but what if I wanted to open up a hedge short when it got up here? I can't. I have no more money left. It's all on this trade because this trade is going to cost me 18 grand. But if I want to free up some capital on the long, I could put this, say, on 21x leverage, right, just for an example. Now, it's only going to cost me, for a long, it's only going to cost me $877 to make that trade. I now have all that extra money that I can deploy on a short or another altcoin or what have you, right? So go watch that video, guys. I don't want to beat the dead horse here, but go watch that video. Super helpful. But yeah, trading is not gambling if you know what you're doing. And yeah, if you want to run no stop loss, like I've run no stop loss sometimes on high leverage trades, but when I get liquidated, I still only lose around 2% of my account, right, or 1% of my account, right? It's all about managing the risk, regardless of how you do it, right? Like just protect your money. So there you go. Shout out to Golden. Thank you for the super chat. Said I don't always degen trade, but when I do, it's on FOMC meeting with 125x leverage LFG, not financial advice. Yo, shout out to Golden, bro. Thank you for the super chat. You said I leverage trade 125x FOMC meetings, and now I'm broke again. Shout out to Golden. Let's go. But yeah. Not lifetime, but our 2 or 3 year plans. Yeah, maybe we could think about that for the premium. But yeah, guys, with all that being said, I think that's all the time I got for tonight's live stream. I just wanted to drop that sauce there. And again, go watch that video I've made. And you can watch the older one too if you want extra sauce. I think it's from like a year and a half ago. It's from way back in the day, talking about how leverage works. It only changes the amount of money that you put on the trade. Or it can change your risk, but it shouldn't if you're managing your risk correctly, if you have an actual strategy. So there you go. You can risk 1% on 100x, just like on 1x. It's the same thing. But there you go, guys. The trick is having a good strategy and setting your stop loss. Absolutely, absolutely. And I have ways I calculate my actual position sizes based off the risk. Don't use cross. Yeah, that is very important too. Don't use cross leverage if you're new, because sometimes with cross leverage, it will drain your account if you're losing a trade. It will just start pulling from your account. Isolated leverage means that you will only lose the amount of margin that you have on the trade. So if you use 100x leverage or whatever leverage you're using, if you only have $500 of your own margin, even if you get liquidated on that, it's isolated to the amount of money on the trade, right? It won't pull from your actual account, right? If you're on cross margin and you put money on a trade and you start going south, it'll just start pulling money out of your account and you can wreck your whole trading account. So there you go. ETH is ripping. I'll take a quick look at this. I'm not going to show it. I'm just going to take a look. Yeah, she's starting to push, guys. Listen, that 2830 level was the level to flip to support. We'll talk about that on the live stream here in a little while. But that's all the time I got tonight, guys. I will see you at 5:45 p.m. Eastern Standard Time on the Frank Candles live stream at normal time. This was a long one. How long have we been going for here? I appreciate every single one of you guys. I love you guys for being here. 2.5 hours, 899 people in here. Smash that like button, guys. Let's rip it up. Highest like video we have on the channel. Let's make it this. I appreciate every single one of you guys. I'll see you in a couple hours. I'm going to go try and eat lunch and breathe and drink water and stuff. I'll see you guys later. Hasta basta. Frankie Candles out. Bing bong.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy. On the road, here we go, yeah we winning by a landslide. Never see me coming, I'm a landmine. Yeah, I ain't taking orders in command, like, yeah, you about to see me on demand, like, you know on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and it's the dream, and we coming for the bag. Yeah, and we ain't never going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll. And it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor. Hey, on the road, here we go, yeah. At the top of the class on a roll. Hey, and it's time to run it up, yeah, you know. Yeah, maxed out, put the pedal to the floor. Yeah, on the road, here we go, here we go. Here we go, at the top of the class on a roll. And it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor. Hey, on the roll, here we go, yeah. At the top of the class on a roll. Hey, and it's time to